live Q&A. But what I need from everyone right now, or not everyone, really just one person, can you see my screen? Go to Q&A and just say thank you. Done. Kathy wins. All right. I shall start the slideshow. First, I shall start with disclaimers, because this is not a solicitation to buy or sell any security ever. This is not advice. The results here are provided for general information purposes as a convenience to you, the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. And while we're at it, I am not, nor is Capital Market Laboratories, professional advice. So we are not qualified people, firms, or corporations. There's a whole bunch of other disclaimers. I am not going to read all of them, but it is important that you read them, or at least that I give you the chance to read them. So I'm going to leave the slide up and stop talking for 10 seconds. I haven't gone anywhere. Ready, go. Okay, and then one more. Most importantly, you should read the characteristics and risks of standardized options, which is available on OCC. And we are now disclaimered out. Hello, happy Saturday. I hope you are well. I'll talk about the point of this webinar. I will talk about what's working, and then we'll do the TradeMachine demo. For people who saw this slide show yesterday, it's a little bit different. It's not actually the same, and there's definitely a more important strategy. Okay. So what's the point of this webinar? Oh, yes. In the what's working, there's going to be 2 examples expanded from yesterday, and yes, it matters. Okay. It matters because it's an expansion of the philosophy of how to deal with a volatility regime, and it's kind of the proof. Anyone can show anyone else an example. It's when you start expanding that examples to hundreds and thousands of companies on different strategies, where you start to say, okay, there might be something to this, right? So what I showed yesterday didn't act. It took us like 20% of the way there. It didn't get us all the way there. Okay, so the point of this webinar is to introduce or review TradeMachine. You guys know that, click by click, button by button. Then a Q&A, of course. How to build on a known winner for a new environment. Okay, super important, I think. So, some people would say this is what's called how to get better. Right? Like this is called trading. Right? It's when you're good at something, that something isn't working as well because an environment has changed. You don't stop doing the thing you're good at. You adjust the thing that you're good at such that it's relevant to the current environment. Right? If you are a walker, then you don't all of a sudden turn into a sprinter. No, you prepare for how to walk in different weather. Okay. So I'm going to do that, and then I'm going to do it again. Right? How to get better. That's what trading is. And they do it again and again and again and again. Remember, as a beginning options trader, you are going to lose money. You're welcome. The reason you are losing that money is not because you feel like donating money. No, it is because you are paying tuition to get to an intermediate trader. Once you are an intermediate options trader, you will probably or possibly tread water. It shouldn't cost money. What it will cost, though, is time. You'll be treading water for a period of time. That time is your tuition to become an advanced options trader. And that's when you start making money. And I'm very sorry to tell you, I don't know how to skip the steps. But what we do when we change one strategy to be better is we will use that same change with our most popular and efficacious strategy. Right? For TradeMachine members, oh, I hear someone's audio. Yeah. Can you, is everyone mute? Yeah, okay, good. And I'll save TradeMachine members the suspense. It's going to be the 14-day diagram. Okay. So we will talk about what's working, which is really a fancy way of saying how to get better. Which is really a fancy way of saying how to walk in the rain. Okay, so what do I mean by walking in the rain? I like walking. I really like walking. I walk with Alicia, and she is my favorite person in the world. She is brilliant. We have wonderful conversations. She likes birds. I like dogs. There are birds and there are dogs on our walks. So I want to walk. I like walking. But while lots of people may think that I'm tough in some ways, kind of, physically tough, I do have a confession. I am really, really soft when it comes to weather. You want to see a really tough grown man turn into putty? Put me in the cold. Israelis don't do well in the cold. We don't. We're not good. It's like we're a battery and we stop functioning below 60 degrees. We just stop working. I'm really, really soft in the cold. I don't like the cold. All right. So how do I walk in the rain? Do I not walk? No, I just told you walking is one of my favorite things in the world. I get to spend time with my favorite person in the world, saying wonderful things to each other while she looks at birds and I look at dogs. And I love dogs. I love cats. I love all animals. But I particularly like it when dogs look at me when they're walking and they start smiling and they fall on their back and they want belly rubs. Who doesn't like that? So I want to walk, even if it's raining. So do I not walk? No, I do not walk. But do I change? Yes, I do change. I put on a heavier coat. I change my shoes. Those sort of mesh New Balance shoes, yeah, those don't work in the rain. I bring an umbrella. But then when I have a heavier coat, I change my shoes and I bring an umbrella, I can do the same activity. I can walk with my favorite person in the world. And as you know, dogs don't mind the rain at all. I see all the dogs. But when I do these things, when I make these changes, I can do better than otherwise when it's raining. I'm more prepared. So the same activity, but I can do it better when it's raining, right? The same activity, I can do better when it's raining. I can make the same trade, but I can do it better when I adjust the entry rules, right? Same trade, but I do it better. So here we go. For people who saw the webinar yesterday, I am starting with Volatility Burst, so forgive the repetition. We have a Volatility Burst scan. It's on the Today tab and the scanner. It's been winning even in a bear market. But first of all, here's the strategy, right? Let's just start. I'm going to gray out the top so I don't get confused with all of the text. We get long. You do not have to write this down. This is all going to be done in TradeMachine. Just trying to convey a message. You get long before you delta strangle, which means you're buying a call and buying a put that is out of the money. Okay. And when do I do such a thing? I do such a thing when this happens, when the stock price dips below the 200-day moving average, that actual day. And the stock is already below the 10-day exponential moving average. When those things happen, I buy this strangle. And then I close when either the strangle's up 20% or 10 trading days have passed, whichever comes first. So that's when I enter. Okay, so this is what I do. That's the open. This is when I do it. And this is when I close it. Simple enough. Okay. So this is it, Volatility Burst. So here are the results. I'm going to call it the old strategy. So I'm going to say walking in the sun is the old strategy. Walking as I normally do with Alicia is the old strategy. I'm very particular about weather. It must be between 71 and 73 degrees. And if it's between 71 and 73, I am comfortable. When I'm comfortable, this is what I was doing. This strategy has done okay during the meltdown. Barely covering commissions, but relative to a bear market, I mean, I'm sure people who are long-term investors wouldn't mind being up 5% in 2022. This is hardly anything to write home about, but that's because something has changed. So how do we get better when it rains? How do I put on a coat, change my shoes, and put on an umbrella? Well, the first thing we have to do is figure out what was this designed to do? What was I designed to do with the walk? I'm designed to slowly move my legs around our neighborhood while spending time with my favorite person in the world. And in the meantime, if there are dogs, I'm going to pet some dogs. And yes, people in the neighborhood think that I'm weird because I pet so many dogs. That's okay. That's what it was designed to do. Okay. In our strategies, we want to find volatility bursts. We want to get in and out of that trade quickly. That's it. I don't want to change what I'm doing. I want to change how I prepare for when I do it. So what has changed now? So why am I even talking about this? Well, a few things have changed. First of all, VIX is over 30. I know it's like 29.50, doesn't matter. VIX is over 30. To basically every stock is under its 200-day moving average. I'm not going to like just wait for stocks to the day they're dipping below their 200-day moving average. If anything, that stock's probably held up pretty well. I probably don't even want to trade that for a volatility burst anymore, right? And the third is stock-specific IV is elevated. That's different than when I walk in the sun. This is the rain. Some might even call it a snowstorm, a blizzard, a tornado, a hurricane. Okay, the next thing we have to decide is, okay, well, so can we implement this change? Okay, I know what I want to do, and I want to keep doing it. I know what's changed. Now what? Well, yeah, I can force VIX to be over 30 if I do this trade. I can change the technicals a little bit to make up for the fact that everything is below the 200-day moving average. That's not a good signal anymore. And I can look at company-specific implied volatility. I can do these things. I'm just going to call it the new strategy. It's walking in the rain. And does it work better when it's raining? Does it work better in this environment? It does. This is walking in the sun, and this is walking in the rain. This is in 2022. This is for the last 2 years. This is right as COVID hit and the VIX spiked. Trades three times better in 2022. I don't know, 8 times better over the last 2 years. And why? Because it's raining. You're going to have a better walk when it's raining if you have an umbrella, a coat, and different shoes. It doesn't mean you can't walk without an umbrella and without different shoes and without a coat. You're just going to get wet. It's not going to be as good. It's not going to be as enjoyable. You'll probably walk faster. You'll probably skip petting the dogs because shit, it's raining. So what happens? I'm doing far fewer trades, and the trades have far larger returns. So look at the number of trades. In 2022, the old strategy, walking in the sun, 55 trades. In 2022, yeah, only 18. Right? This is far less frequent of a trigger. Of course it is. It rains far less often than it doesn't rain. I know some of you in Washington and Portland disagree. I'm talking about the Southwest. Okay, so I'm just going to go through everything I just said. We have a volatility burst scan. It's on the Today tab. It's been winning in a bear market. We know what the strategy is. We know how to get better. We figured out what it was designed to do. We figure what has changed. We implement this change. It does work better. Okay, but here's the big one. What if I was running in the rain? I like to walk, but please don't be confused with the fact that I also like to run. In fact, I'm one of a few people who actually get a runner's high. I like running. I generally don't like running in the rain. I generally like running in good weather, between 71 and 73 degrees, ideally. So we have a 14-day pre-earnings diagonal scan in TradeMachine, as almost every TradeMachine member knows and probably does. It's on the Today tab and Scanner tab, just like Volatility Burst. It's been winning even in a bear market. I'll prove it to you. We know what it was designed to do. It was designed to get bullish a company before earnings while also benefiting from time decay, right? Something called, I've called the theta paradigm. What has changed? The exact same things that changed for Volatility Burst. VIX is over 30. Everything's below its 50-day, 200-day moving average. Doesn't even help anymore. We can implement the change, and does it work better? Well, yes, of course it does. Walking in the rain and running in the rain require similar preparation. Am I going to run with an umbrella? No. Am I going to run with a coat? Yes. Am I going to run in different shoes? Yes. 2 of the 3 things I did when I walk in the rain, I'm going to do when I run in the rain. It's not identical. It's pretty similar. It would be funny to see someone running with an umbrella, though. So this is how it's done. In the last 2 years, this is the old strategy. Just straight down the middle, what we usually do. This is be running in the sun. And it's running around. You see the average trade return actually not that different. Win rates are a little better, fewer trades, but what's really happened? It's been 2022. In 2022, the old strategy is down 10% per trade and wins less than 40% of the time. But when I'm prepared to run in the rain, all of a sudden my average trade is 46% and my win rate is 83.3%. But exactly the same thing as walking in the rain. I am going to have far fewer trades and there should be far larger returns. I didn't say far fewer trades, therefore I speculate more money and have far larger returns. No, far fewer trades, speculate the same amount of money, have far larger returns. Now, I will go to TradeMachine. I have, hypothetically, a script. I'm going to go off this script, and if I get confused, you guys are going to know I get confused because I'll start hemming and hawing. I'm going to try to do this beast that we've created in a way that is targeted, insightful, helpful, and at the end, I'm going to use it for exactly what we just talked about. All right. When you log into TradeMachine, you actually land on the Today tab. Having said that, the Today tab is actually the child of the Backtest tab, the Pro Scan tab, and the Alerts tab. So these three tabs are the Today tab. So I'm going to explain and demonstrate the other three tabs. And then when I get to the Today tab, I'll say what it is, and everyone will know how it happens. And then I'll say what it is. Roughly speaking, if you're brand new to TradeMachine, the Today tab is where you land, and it shows you trades that are triggering on the day. Now, that's a lot. Which trades? Why are they triggering? Why do I care? Absolutely. We got to get into TradeMachine. I'm here to tell you that, in fact, there is actually only two tabs in TradeMachine, the Backtest tab and the Alerts tab. Everything else is just a copy and paste of that in some interesting manner that makes it easier for users. Backtesting and alerts. I want to test something. And if I like it, I want to know when it happens next time. That's it. I like a thing. I want to know when the thing happens. Right? That's it. Everything else, every other tab is born of that. So let's go to the Backtest tab. This is the most complicated tab. It is the guts of TradeMachine. It is the computational workhorse. But once we understand the Backtest tab, the rest gets really easy. So we're going to go through something that's going to feel a little bit like slogging through the mud. And then we're going to realize that we've gotten through the hard part and the rest is wonderfully easy. Okay. So let's do it. Kind of mentally prepared. Here we are. It is the Backtest tab. It spins loading settings until you do something. And then it says enter a ticker. So I will enter a ticker. And I will enter a ticker that everybody knows. It will be Apple. AAPL. Now, what are we doing with Apple? I want to test a strategy. Here are some strategies. I want to test a call. But what about the call? I want to test buying a call. Okay. And I want to do it over 3 years. So here is where we select our strategy. We're going to do many. Here's where we get long or short. This stuff I'm going to deal with later. This is where you do your time frame. You can, if you want, just type in the exact days you want for the time frame. You do not have to choose preordained buttons. Okay. Now, let me go here. There we go. So it is running. That's weird. Yes, sorry about that. Don't worry, these buttons will be clear in a moment. Okay, so I'm running a test for Apple, just buying a call for 3 years, and it's with options that are the closest to 30 days. This is not really a strategy, just buy calls. Okay, and of course it looks good, but we've been in a bull market, so it's not really a strategy. The first thing I want to do is I want to notice that when you enter TradeMachine and you do a back test, you get lots of tiles on the same stock. These are different by their delta. What is a delta? That is a good question. A delta measures how in the money or out of the money an option is. We have a full dossier on what delta is and why it matters. It's on the Learn tab. I'll get there. For now, if you don't know what a delta is, just believe me, it's more in the money here. This is at the money, and this is less in the money. This is a lot of information. And if it gets overwhelming, what you can do is simply put a comma after Apple and you will only see the middle one. That's an at-the-money option. You can set your deltas by going to the options at the settings screen. And down here, by the way, this is where you set your commissions. This is how you learn about delta. What is delta? It will choose, if you put a comma, it will always choose the middle one. I know there's two here. I'll show you. I'll tell you what that is. Okay. If you don't do a comma, it'll show you all of it. All right. So now we're looking at kind of a strategy of just buying a call every 30 days in Apple and praying. Well, let's do something different. As of right now, TradeMachine is ignoring earnings. That is, earnings come, earnings go. It doesn't matter. Well, let's say we're interested in this kind of just getting long, but we want to avoid the risk of just like the straight up coin flip on earnings. So if you just click never trade earnings, what TradeMachine is going to do is the exact same thing, but 2 days before earnings, it's going to close your call and it will wait until 2 days after to open the call. That's all it is. It's just never trades earnings. It avoids earnings. So we'll do it. You notice that the win rates went up, returns went up, right? We're not trading earnings. All right, well, since we're here and we're buying 30-day calls, I don't know, let's see what happens if we buy 15-day calls. So for days to expiration, what TradeMachine does is it does not manifest a fake option. If you say, I want the options that are 30 days to expiration, it will choose the options that are the closest to 30 days for expiration. That might be 34 days or 27 days. It's just going to do the best it can. It does not, there's no simulation in TradeMachine where we make up a 30-day option by creating a, let's call it a synthetic option by combining two nodes. These are real options and real option prices. There's nothing fake, right? There's nothing synthetic. So let's just say, I don't know, well, if it works this well, let's just do it every 15 days. I don't know. So if you just change it to 15 and you're going to get the same computation, but now TradeMachine is looking for the options that are closest to 15 days. And what do we see? More trades. Of course, there's more trades. Instead of trading every 30 days, we're trading about every 15 days. Alternatively, you could say, I want to do it with 2-month options. You can go to 60 days. Sure. TradeMachine is looking for the options that are closest to 60 days. And what do you get? Well, you get fewer trades. Of course, you're trading every 60 days rather than every 15. Yeah. Let's go back to 30, just since monthly tends to be a very common thing. Of course, you could put 7 and try to get the weeklies, whatever you like. All right, we're here. Nothing particularly interesting yet. We're simply buying a monthly call every about 30 days, but we're always closing it before earnings. All right, well, let's see if we can add some technicals. Maybe make a rule out of this. Let's go to technical open. Once you click technical open, you have choices. You can do things. Let's say, I don't know, you want to do it only when the stock price is greater than the 50-day moving average. So you can choose above, below, crosses up, crosses down, simple moving average, exponential. You can type whatever number. Just same strategy with one rule. After the option expires, it's only going to enter if the stock price is above the 50-day moving average. Okay, that should give us fewer trades. It does. It's the beginning of an open rule. It's not like sexy, but it's something. Okay. We can also layer, right? So maybe we say, I don't know. Let's put another one in here. Let's say it's the day. Oh, sorry about that. Let's say it's the day that the stock, the actual day. We wait for the actual day that it crosses up through the 10-day exponential moving average, or the short-term moving average. It waits for the actual day. It was below it yesterday, and it's above it today. And we also want the stock to be above the 50-day moving average. So it's above the 50-day moving average, and we're waiting for the exact day that the stock crosses up through the 10-day exponential moving average. Some people might think that's a good idea for short-term momentum. Some people might say that's actually a good idea to short the stock because there's too much short-term momentum. Doesn't matter. This is not about demonstrating how a strategy works. This is about demonstrating how TradeMachine works, so you can create a strategy that does work. Okay, so I'm just gonna save it. And I have a new opening rule. Okay. Obviously fewer trades, because catching the day Apple goes above the 10-day moving average is harder than just trading every 30 days with no reason. The technicals are always, you can always look at the technicals by going to technical open, but we actually write it down right here for you. So we open when the stock is greater than the 10-day moving average, but yesterday it was below, right? That means it crossed. Yesterday it was below, today it's above. And the stock's above the 50-day moving average. Well, since we're here and we're just kind of fly-by-nighting buying calls with a little bit of a rule, which seems to be working okay, we can add a stop and a limit down here. Right? So let's just say we want to close this if we make 50% on the options. We also want to close if we lose 50%. Where do you go? It's a miracle. Your win rate goes up because you're closing trades out that might have been 300% winners when they're 50% winners, but you're also closing trades out that were up 60%, but then ended up going down. So when you add a limit, you should have higher win rates, but lower total returns, right? This is the beginning of you forming your own personality in trading options. Do you prefer win rates, higher win rates, to larger returns, but lower win rates? If you like larger win rates, you're probably using stops and limits. If you just let it go, you're okay with the lower win rate, but you want the bigger wins, and you're probably not using stops and limits, right? This is the formation of your trading personality. But rather than guessing, you can actually see the impact. And while we're here, we have 30-day options. Anyone who trades options knows that being naked long an option, you're eating theta. You're eating time decay. So maybe you say it's a 30-day option, but no matter what, if it goes up 50%, I'm out. If it goes down 50%, I'm out. But even more, if it doesn't hit 50-50 after 10 trading days, that's a Monday through Friday and a Monday through Friday or whatever, a Tuesday to Tuesday 2 weeks later, trading days, not calendar days, trading days. Let's say you just want to close after 10 trading days for better or worse. You just don't want to eat all that theta. Like, oh, here you go. Now you can do that. This is the beginning of a strategy. I'm not doing this as a demonstration of a good idea, but this is how you start to use TradeMachine. I'm going to take a pause right now. Pause. We have looked at getting long a call, pretty simple, in a single stock. We'll expand that into portfolios. We've taken a look at how you can adjust the deltas, how you can adjust your commissions. If you want to know what execution fill type is, I'll show you on the Learn tab that you just say, what is execution fill type? I'm not going to go over it on this webinar because it becomes a little bit too long. But this allows you to choose how optimistic you are about the fills you're getting, right? Your actual executions. Okay? If at any time you like this trade, and you think, I actually want to do this today, and you're thinking to yourself, well, what is the 50 delta call? If you click Show Options Chain, we show you. Right? And if these were 30-day options, well, it would actually be a tie today between 27 and 33. But remember, the market's closed. So on Monday, this would be 31 days away from expiration. We'll do that. Oh, okay. And now I want the 50 deltas. Okay, here it is. The 51 deltas are the ones closest. These are the options you would be buying if you wanted to do this. So certainly you can do it on your brokerage, and you should do it on your brokerage, but TradeMachine does have option chain data intraday. Okay, great. So far, we have liked the idea of getting long a call, never trading earnings, an interesting technical rule, stops and limits, and a maximum trade length. We can identify which option that is in our brokerage without going to our brokerage. And these are the results. Let's go a little deeper. What if we like this idea of trading before earnings? So it's not just that we want to never trade earnings. We want to do something very particular with earnings. I'm going to click Custom Earnings. And this gives me the ability to do something. I want to look at the idea of getting long this call 14 days before earnings. I'm going to bring in a chart here for you guys. So chart. I'm looking at this yellow area, getting long 14 days before earnings, E is the earnings, and then getting out before earnings. We don't want to take this earnings bet. If you want to, you can test that too, but that's not the idea. It's this idea of pre-earnings optimism. Let's say we want to test that, and then we can test at various points, 14 days before, 7 days before, calls, puts, put spreads. Okay, now the one thing I have to change now is I want to kill my technical open. because I'm really much more focused on 14 days before earnings. Let's see here's how it looks. Not that interesting. 6 wins, 6 losses, net, a loser. This is buying a call 14 days before earnings, Apple earnings over the last 3 years, and selling it the day before earnings, not taking an earnings bet. Oh, well, why 2 weeks before? Why not make a shorter trade? I don't know. How about 1 week before? Okay, from negative to positive. Okay. Also, while we're at it, if you know the company you're looking at well, which I'm assuming you do, you know that Apple actually reports after the close. Since Apple reports after the close, let's say Apple earnings are Wednesday. 0 days before Wednesday is Wednesday, right? I can actually close 0 days before earnings with Apple because I will close on Wednesday, right when the market closes, and then Apple has their earnings and the whole hoopla happens. So I could actually do that if I so choose. I could at least test it. Okay, returns are getting a little better. Interesting. What if I use 15-day options instead of 30-day options, right? Now I have this flexibility to test certain ideas. I don't know. Oh, okay, returns went up, makes sense. If something works, then using shorter term options is a little bit more levered than long-term options. Okay, all right. Remember, at any time I want to check different dates, the great financial crisis, I can just click a button, type it in, whatever I want. All right, I am done with page 1. I want to go back to the original strategy. I've had enough of this. Never trade earnings. Just buy a call every 30 days. I want to do it with all of the deltas. I just want to see everything. So what do we notice about this? This is in the money. This is very in the money. This is actually a deep. This is in the money, at the money, out of the money, further out of the money. What do we notice about this? Look at the win rates. Win rates tend to go down when you are long options as you get further out of the money. In fact, just so you know, that's actually what a delta is. A 20 delta says, roughly speaking, in the short term, if you approximate the log normal distribution with the normal distribution, which is a perfectly reasonable assumption in the short term, there's about a 20% chance a 20 delta call will be in the money. There's about a 50% chance a 50 delta call will be in the money. Not if you will make money, if it will be in the money. Well, there's an 80% chance that an 80 delta call will be in the money. So you can see that delta matters without even being an options expert. Simply by having a computational power of TradeMachine, you can start figure things out. Like, okay. So if I'm someone who goes after win rates, maybe I'm getting long, larger deltas. If I'm into bigger wins, right? Look at the return, right? Into bigger returns, then maybe I'm going further out of the money. I'm going to give up my win rate, and I'm going to have average larger returns. So if you hit a cold streak, you're going to lose a lot in a row, but you're going to make it up with larger wins. Well, that's great, but why do we have to be long calls? What if we got long a call spread? So we're protecting ourselves from some of the time decay. So I'm just going to click call spread instead of call. Same thing, long, never trade earnings. I don't have any technicals. Let's just do that. Okay. I'm going to take this image and I'll bring it back because I know we're going to start to get to a lot of numbers. Not that the numbers really matter. This is a how-to. I'll get to the strategies. Don't worry. Okay, here's a call spread. So now what it's doing, just so you know, let's go in here. Remember I told you that there's a second delta? The second delta is for spreads. So TradeMachine chooses the first delta if you're long an option, and chooses the second delta if you're using spreads. And I reset the deltas for something that I consider, let's say, semi-normal. Doesn't mean you have to consider it semi-normal. A little bit of an error. I apologize. I think this is because people are mimicking me. So it will get a little harder. Yeah. You guys are kind of mimicking Ophir. It's okay. I got you. So as this loads embarrassingly slow, I could tell you a story. Ugh. All right, here we go. So you'll notice with call spreads, here are the differences. So you don't need me to walk you down the differences, but you can just see kind of what's going on. Okay. Maybe I don't know, want to throw in a technical again. Well, actually, let's do never trade earnings, so we don't have to deal with the earnings trades. You just have to say, well, wait a second here. Look at these have really good win rates here. The win rates are higher than just buying a naked call. Yes. The win rates are higher when you spread. The returns are lower. That's a trade-off. What kind of option trader are you? What's your personality? Do you want higher win rates or larger wins? What can you stomach? Well, you can get a long call spread. You can also get short a put spread. So you can just go put spread and then go to short. That's also a bullish position. It's a little different. I would say buying a call spread is bullish and selling a put spread is not bearish. I'm not bearish. I need water. Oh, yeah. So what you'll see when this loads, when you're selling put spreads, remember that if a delta is the probability that an option is in the money, then if you're selling that delta, you should have higher win rates if you're selling smaller deltas. Because when you sell an option, you want it to expire out of the money. And look at the win rates. As we go down, 66 is a little bit of an anomaly, but our highest win rates, here they're going up. They're all going up. See this? Say, maybe I'm the kind of person that likes win rates. Interesting. So I'll tell you what I'm going to do. I'm going to make that the middle. I'm going to throw a comma on there, so I only have to look at that one. And all of a sudden, I've gone from examining a long call to long call spreads to short put spreads. Okay. This is an interesting strategy. Well, hell, since I'm here, maybe I should, I don't know, compare this with other companies. How about Amazon, Datadog? I don't know, whatever. Hey, this is okay here. Hold on a second. I'm selling 30-day put spreads. They're out of the money put spreads every 30 days. I'm not trading earnings. I haven't really put anything else on it. This is okay. So you want to know what the details are before you get too excited. So if you tap on a backtest tile, I'm just going to click on it. All of a sudden you get the details. Right. The average trade, how the stock did versus owning versus doing a strategy, which is selling put spreads, commissions. You actually see every single trade. And you can download it. Just download it in Excel. So this is your details page. And you can also go to the options chain from here if you want. So you can figure out what a 40-20 delta is. It doesn't have to be a mystery. Let's just throw a technical on there just so we can make it a little more interesting. I'm going to say when the stock is above the 200-day moving average, just something easy. So essentially, I only want to sell put spreads if the stocks are not in technical failure. Doesn't look great for Datadog. Yeah. I'll kill Datadog. Let's say I like this. I don't know. This is not a strategy per se that's so sexy. Stocks greater than the 200-day moving average. Don't trade earnings, sell put spreads. It's not so exciting. But let's just say I want to do this. I want to know when this happens. Like, actually, let's even go further. Let's say it's the day the stock crosses up through the 200-day moving average. So it was in technical failure and comes out. I don't actually know how this will do. Well, look at that. It doesn't happen often, but when it happens, there's a high win rate. You say, okay, that's what I want to do. So two things. First of all, if you like this strategy, you can hit the save button, call it a strategy. This would be short spreads, stock greater than the 200-day moving average. That's now saved. So I go to my strategies, and there it is. If I ever want to come back to TradeMachine and have it. Okay. And let's say, hey, I'd really like to have the alert. So you hit save, so you click add alert. It now takes you to the alerts tab. We have gone from the backtest tab to the alerts tab. And remember what I told you, that this entire machine is nothing but the backtest tab and the alerts tab repurposed for convenience. So I'm about to show you the second part of TradeMachine, and the rest is all done for you. So this is for Apple and Amazon. You can feel free to add any tickers you want here. It's a technical alert, and it's when the stock price is greater than the 200-day moving average today, but yesterday it was below. That's a fancy way of saying it's crossing above the 200-day moving average. Put your email, put your phone number. Last time I showed my phone number, I got a bunch of phone calls and text messages. I appreciate the support. I don't feel like doing that again. But if you want a text message, you can do that. And you like us, yeah, you know what? You maybe write yourself a note. You know, this is like the, you know, stock, oops. Yeah, sorry. The link will always be there, but say stock above 200-day. I just add the alert. It's magical. Apple and Amazon. Here I'll go to created today, just created. I'm going to get this alert. When Apple crosses above its 200-day moving average, and when Amazon crosses above its 200-day moving average, I'm getting an email, and it's going to give me this strategy, and I'm going to see my note. It says stock above 200-day moving average, get short or put spread. Oh, all right. All right. Okay. All right. The backtest tab and the alerts tab. We've actually covered all of TradeMachine. Let me prove it to you. I want to go to the Pro Scan tab. So the backtest tab is for people who are in creation mode. You're looking for your own strategy. You do not have to have your own strategy. You can have your own strategy. The scanner has about 40 pre-built strategies that we've tested that have done well over various time frames. And so the Pro Scan tab can be a way to create alerts for yourself without going to the backtest tab, trying things like that. So let's just look. I would say that the backtest tab is like fishing. It's hard, but it's worth it. And the Pro Scan tab is just going to the fish market and pointing what you want. Like I want the trout, I want the salmon, you know. So you can choose which group you want to scan on. Let's just do, I don't know, the Dow. And there's a bunch of strategies. So there are ETF strategies, which I really want to show you guys. Okay, strategies for ETFs. The strategies which do the never trade earnings thing, which we talked about with Apple. It's not particularly interesting. It just says don't trade earnings and then do something technically. But there's also stuff that you only trade during earnings, if you're that kind of speculator. Things that only happen right after earnings, and things that only happen right before earnings. So let's just look at getting long a call 14 days before earnings. It's this exact same picture. Let me bring it up. Oh, I closed it. 14 days before earnings. Okay, here we go. And here are the results. And let's say you only want to look at things that have, you know, kind of worked over like more than 3 years. So here they are. If you like these, you can do one of two things. You can just say, hey, I like all of these or some of these. I'm going to add the alerts. I just added 5 alerts without going to the alerts tab. Or I can take a deeper look, right? And I can say, hold on, this looks good. JP Morgan, click on it. We're going to go from the Pro Scan tab to the Backtest tab, and now we've got JP Morgan. And you say, whoa, what is this exactly? Oh, it's getting along a call when it's 14 days before earnings, and you close 1 day before earnings. With a stop and a limit, none. And maybe you like this strategy. I'm going to say the strategy too. This is, I'll call it 14-day pre-earnings. Now, if I ever want to try this in other tickers, I can. So remember when I said that everything in TradeMachine is sort of a child of the Backtest tab and Alerts tab? This is what we mean. The Pro Scan tab is simply running tens of thousands or millions of backtests and presenting it to you all at once, as opposed to doing what we did at the beginning, kind of hunting and pecking for our own strategy. Once you set your alerts, you're good to go. If you prefer to set your alerts after you look at the backtest, right, which is here, then you can just add the alert here. That alert's already been set. So that's, I'm going to go back to the Pro Scan tab for a second. So this is the beginnings of what the Pro Scan tab is, right? I also want to point out that there are ETF strategies, which I don't think a lot of members are using, but if you look over the last 3 years, for example, in SPY, you're looking at something that in the last 3 years has triggered 11 times and has never lost. Same with XLE, that's energy, IWM, Russell 2000, right? Here we go. HYG, that's high yield bonds. So kind of whatever fits your style. Feel free to peruse these strategies. You want to know what each of these strategies are? There's 2 ways. One is to click on it like we did on the Backtest tab and then just open it up. Oops. And then just open it up. So let's do short term. This one's kind of a beast. So we're looking at XLE, that's the energy spider over the last year doing this custom strategy. You're like, well, what the hell is this strategy? 1 QA, 1 by 2 by 1 by 2 monthly 37, 30, 20 tests. Like it's like head explode emoji, right? This is an advanced trade. It's actually a custom strategy. So while you can do the normal option trades, you can also just create your own strategy. That's called a custom strategy. And if you want to look at what a custom strategy is, you just click edit. And here it is. I'm actually not going to go over what this trade is. I just want you to know this is how you would figure it out. You can look at it on the Learn tab, which I'm going to go to shortly. And if you like this trade, you can set an alert. The technical open is fairly complex. Fairly complex. These are the requirements in order to do this ETF trade, which in and of itself, this trade itself is 4 legs. So it's fairly complex. This I would consider advanced. And you'll notice that the advanced trades tend to do better because options trading is volatility trading, whether you mean it to be or not. So you might as well do it. You might as well know that you're trading volatility because you are. Okay, we've done the Backtest tab. We've done the Scan tab. We've done the Alerts tab. Let's do the Today tab. And this is where the job gets a lot easier and the webinar starts going faster. The Today tab takes 13 of the strategies that were on the Pro Scan tab. Just takes 13 of them. Some advanced, some intermediate, right? Some beginner. And it tells you if they're triggering on the day. It's as though you set alerts for these companies, but you don't have to set alerts and take the time. We'll just do it for you. We'll show it to you. Okay. This is all blank right now because it's Saturday. You can look for all tickers or just tickers in a certain group, right? You probably don't want to look at all tickers because some of those things are really illiquid. And even further, if you just don't want to go to the alerts tab and you don't want to go to the scan tab and don't go to the backtest tab, you can actually set alerts from here. You can just set today tab alerts. And this is alerts I get. The Bollinger buy the dip, I want to see it if it's a Dow 30 company, a NASDAQ 100 company, or a company that's in the largest 500, essentially the S&P 500. Buy the sell off, fade the dip, some strategies, some things I only care about certain groups. Right? That's how I set my alerts. That's a way of setting alerts without the alerts tab. And if you say, could you just tell me what the today tab is? Yes, I can. You just click a button and it tells you what the today tab is. And then you say, well, what does Bollinger buy the dip mean? What is this? What are these words? Click the question mark, and all of a sudden you have a video with a password, and it will tell you what the strategy is. You can also learn. You can also find out on the Learn tab, but it's all at the click of a button. Here it is. Here it is. Here it is. So you know what you're looking at. There's one other part of the Today tab, and it's called Notable Technical Breakouts. After this, I assure you, I will get to the two strategies that are working, and I'll actually show you how to do it in TradeMachine. Notable technical breakouts are technicals which I found to kind of lean toward good ideas to get long, but there wasn't statistical significance. So if you're just trading stock or you're looking for a few more ideas, these could work, but I can't say fully that there's statistical significance. They just leaned in that direction. And all of these are going to be stock trades. So if I clicked on a MACD breakout for Google, you're going to notice the strategy is stock, getting long stock. You can do what you want with that. You say, oh, okay, well, now I want to see if I got long a call or got long a call spread or short a put spread. This is a stock backtest. Last thing about the backtest tab, and then we'll be done with today, backtest, pro scan, and alerts, is if you wanted to see what it was like to buy a stock with a dollar cost average approach, right? Simply getting long stock. You take all of the earnings handlings off, you take all of the technicals off, take all of this off. You just say, I want to know what it's like to buy stock. So let's say I wanted to invest in Google. I wanted to start with 100 shares. I wanted to add 25 shares each time I add. It's dollar cost average, so I don't want to do it more than once every month, right? I kind of want the stock to go up and down. I want to make sure I don't buy the top. And fundamentally, I don't want more than, let's say, 1,000 shares. Okay, I'm starting with 100. Let's just add 100 every time. I don't want to end up with more than 1,000. I'm going to stop buying. And they make a rule like, well, okay, well, do you just do it every 30 days? You can do that. That's what this would be. Maybe you say, I also only want to do it when the stock is like down. Like only want to do when the stock is down, I don't know, 5 or 10%. But you can actually go further. You can add a technical condition and say, clear all this. Say, actually, I only want to add to my DCA if the stock in the last 2 weeks was down 10% or more. Well, say 5%, right? You're kind of trying to catch it on a downtrend. Save it, look over the last 5 years, and see what happens. It turns out just buying Google stock every time over a 2-week period, it was down 5%. In the long run, didn't lose. This is not surprising. I'm hand choosing one of the best performing stocks in the history of financial markets. I'm just showing you, this is how you can use a dollar cost average strategy. That's how you can test it. Okay, today is done. Backtest is done. ProScan is done. Alerts is done. Learn tab is an artificial intelligence powered knowledge base. So for example, we had that ETF strategy and that sure looked pretty complicated. Oh, was that technical ratio spread? Here it is. Here's a video. Or you thought, gosh, what is delta again? What is delta and why it matters? There it is. What did he say about execution fill type or something? Oh, yeah, right there. You know what? Like, how do I use TradeMachine? Oh, there's a user's guide to TradeMachine, a thorough TradeMachine user's manual in video format. So that's the Learn tab. Okay, done, 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 done. Community is easy. Go to community. You must agree to the terms of service every time. And we do this because if you do not agree to the terms of service, we have the right to cancel your account at any time, because every time you got in there, you agreed. So don't violate the code of conduct. My level of tolerance for this is 0. You agree. And all of a sudden, you see people talking about trades in TradeMachine. This may look like Twitter. It isn't. We built this from scratch. Okay. The last tab is the Create tab. I'm actually not going to cover the Create tab because it becomes such a long webinar. But what I will tell you briefly, the Create tab mirrors the Backtest tab. The Backtest tab allows you to do things with options. And once a backtest is opened, let's say you open a 14-day long call, if the stock goes above the 50-day moving average. Well, let's say 4 days later, the stock goes above the 50-day moving average again. The Backtest tab will not open another call. It's said, no, I'm shutting my eyes off to the world. This is a 14-day strategy. The Create tab doesn't do that. The Create tab is true creation. So I'm going to take off hold through earnings. Let's just pretend we wanted to look at Apple. We wanted to see when the stock price, every time the stock price crossed above the 50-day moving average. Doesn't matter if it does it every 3 days, that's it. So update it. On the right-hand side, you're instantaneously going to get computations for you. If you held it for 1 day, you would have lost. If you held it for just 5 days, you would have won. 10 days, you would have won more. 22 days, won even more. 44 days, more. 66 days, you get it. So the Create tab allows you to see how stocks behave with certain technicals, irrespective if they overlap. And if you like what you're seeing, then you go to the Backtest tab and try it with options. If you go to the Learn tab, there is a Create tab content. All right, so I have finished the part of the webinar that talks about how to push buttons. Now I want to get back to the part that was most interesting to me, which is how to trade, how to walk in the rain. But now I'm going to do it for real. Hypothetically, I have a Word document. Let us say it is here. Here we go with trading, guys. This. Let's go to the Pro Scan tab. We'll use the Dow 30. We'll select the technical long strangles. Remember, I showed you 2 strategies that were walking in the rain. One was walking in the rain, one was running in the rain. Okay, I'm just going to click on any ticker, McDonald's, doesn't matter. I'm going to turn this into a 2-year back test. I'm going to look at 3M. Make this 3 years. Okay, so over the last 3 years, this is how this is done. It's not very good. This is the volatility burst thing, right? You can look at the technicals by going to technical open. All right. I'll take a snapshot of this. It's a reference. Here's the technical open, actually. So remember, there's a technical open. It's the day the stock crosses down below the 200-day moving average, but it was already below the 10-day moving average. And we said, well, that's a problem because like all stocks are already below the 200-day moving average. Remember that? And then on the closed technicals, we were down here. Sorry. So let's walk in the rain. So first thing I want to do is I want to change my closing rules. We're in a high volatility environment. We know that we are. I don't want to hold long options for 10 trading days. I want to hold them for like a maximum 1 day over a week, which is 6, right? This guarantees I'm getting a Monday. And since I'm doing that, I'm willing to stretch a little bit with my gains. But this is a risk mitigating move. Okay, let's work on the technical open. I said the technical open didn't make sense anymore because every stock is below the 200-day moving average. It's not a signal test. We're looking for signals. Okay, so I'm going to change it. Right? How do I keep doing what I'm doing? Right? I want to walk. I want to walk with my favorite person in the world. But it's raining. So I'm still going to get long a strangle. It's still going to be an out of the money strangle. And we'll look at similar technicals. But instead of waiting for the day that the stock crosses down below the 200-day moving average, I'm going to wait for the day the stock crosses down below the 10-day moving average, and it's already below the 200-day moving average. This is not a big change. It just reflects the reality that every stock is below the 200-day moving average. So if I'm looking for a volatility burst, that is another drop, another technical failure, I'm going to have to look at a shorter term breakdown. But there are other things. So I'm going to show you this from the slideshow. See if I can find it. Remember this? I said, can we implement this change? So I changed the technical slightly. Fine. I want to force the VIX above 30, and I want to look at company-specific IV. So I'm going to do that. I'm going to go to VIX. I'm going to say it has to be above 30. And I want to look at the IV rank or percentage, and I want it to be over 85. It can be 90, doesn't matter. Now I'm addressing exactly what I said I was going to address. Remember? I said this. Can we implement this change? I'm going to save it. Okay, it's getting better. Remember, this is what we were dealing with at first. 3M, same time period. 1 win, 2 losses, 2 wins, 1 loss, positive return from a negative return. Okay. We're getting prepared for the rain. We've put on our coat. We've changed our shoes. We do need that umbrella. How do we fix the umbrella? In general, in general, when you're using options, if you're using out of the money options, you're really facing time decay problem if you're getting long. But in an environment where volatility is rising, the out of the money options hold up okay for a little period of time. I'm willing to go a little bit further out of the money because I'm closing the trade after 6 days as opposed to 10. Remember? So I'm taking part of my theta decay down, but because of that, I want to give myself a little bit of a boost with the possibility of a large move. And it's magic. I'm doing the same thing, right? I'm doing the same thing. I'm still walking. I'm still buying an out of the money strangle. I'm still doing it with certain technical things. I still have a limit gain, but I've adjusted. Because walking in the rain is different than not walking in the rain. And if you're trying to walk normally, but it starts raining, you get bad results. Right? But if you reflect the reality that it's now raining, you turn the results around. You get to take a walk with your favorite person in the world. You get to have a great conversation, and you even get to pet dogs, even though wet dog smells funny. It's fine. Right? So that's one. Now I want to show you the powerhouse. Oh, by the way, remember that this wasn't just for fun. It wasn't just because it worked for 3M or something. We have the results. Okay. Right? These are the results. When I was prepared to walk in the rain, I took a 5% winner to a 15% winner, took a 2% winner to a 17% winner. I just traded less often. Let's do the one, let's do the big one. Let's go to the Pro Scan tab. Let's go to, let's say the Dow 30. We're going to do the 14-day diagonal. Pick any company. Cisco, doesn't matter. Let's use a portfolio. TradeMachine members, you have the ability to create portfolios up to 50 stocks. And if you're a platinum member, you have up to 100 stocks. I've created, well, I'm the CEO of Capital Market Laboratories, so I get even more than 100 stocks. But I have mega caps as one of my groups. I went to, CML Viz. I did a scan for companies over $100 billion and I created it. I'm going to do this just for 2020. So, sorry, 2021, pardon me. Sorry, 2022. Wow. So just for 2022. This is going to take a little while. So it's checking against every company. Boom, 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 boom. You can see TradeMachine growing. Running through it. This is as though I'm walking in the rain, but I'm not changing the fact that it's raining. Right? This is the old strategy. We can start seeing the results. This is just for the last 3 months. So a really particular time frame. Here come the results. Here come the results. Here come the results. All right. And here's a summary. Remember this? Average trade is a loser. Well, what do we do? What do we do? I'm just going to say one thing. I'm going to kill this technical. And I'm going to say the VIX is over 30. It's a reality check that the weather has changed. I should get fewer trades. The trade return should be larger. And the win rate should be larger. You can see over the last 3 months, this isn't happening very often. There's only been one earnings event. So this, at most, this could happen one time, at most. Look what we're getting. Win, 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 win. Oh, there's a loser. Win, win, win. Remember, this can only happen one time. It's just 1 quarter. So it's either a 1 or a 0. So I call this running in the rain. Right? And here we go. Right? Average trade, 46%. And in fact, we knew that was the case. Right? 46%. This is the same ethos of the trade. The idea was to get pre-earnings optimism, to sell some volatility in the meantime at the diagonal, but to account for the fact that it's raining. It's the same idea. I still get to walk with my favorite person. I still get to run. But I have to adjust for the fact that it's raining. And if it's raining, then I will do something different. This is how you get through this period. You start setting triggers that reflect the current environment, like a VIX over 30, like elevated implied volatility in specific stocks, like the idea that basically every stock is below the 200-day moving average, so we can no longer look at each other and say, the day the stock dipped below the 200-day moving average, it's a trigger. No, every stock is below the 200-day moving average. How about we just say stocks are below the 200-day moving average and we wait for them to go below the 10-day? Okay, that might be time for another bad thing to happen for volatility burst, let's say. And instead of having on this trade, the stocks have to be above the 50-day moving average. No, nothing's above the 50-day moving average. I don't care about that. I'm trying to see if VIX is elevated, if I can still do this diagonal. It's the same run. I'm just going with a thicker coat and better shoes. This is how you trade to profit in a bear market. You have the tools intellectually to observe what is happening, right? You have that in you. You don't need to be an options expert. Let me get to that slide. You don't have to be an options expert to understand that the VIX is over 30, and it didn't used to be, that lots of stocks are below their 200-day moving average, but they are now, and that IV is elevated. You don't have to be an options expert. But because you have that intellectual capacity to recognize that, you can then adjust what's happening in TradeMachine, change your trading. And the truth is, while being long stock during a bear market sucks, and I'm getting wrecked, options trading gets far better. It gets far better. It starts to follow patterns far more frequently than it does otherwise. Backtesting is great during a regular straight down the middle bull market, no problem. But when you get into these extreme situations, there are certain things that just tend to work more frequently. Instead of finding a trade that's a 55% win rate, is something with 65% win rate. Right? Instead of having to be in the trade for 10 days, you can be in trade for 6 days. You have this ability, and TradeMachine allows you to test it. So that is the end of my formal presentation of TradeMachine and how to run in the rain and how to walk in the rain. I will go to the bathroom. I will come back and we will do a live Q&A. So until then, I will play some Holden. I'll be right back. Let me share the screen. Hold on. Don't get excited. All right, never mind. There will be no music. I'll be right back. Okay. I am here and I'm ready for Q&A. Ms. Alicia Newman, if you would. She's not around. Hold on. I'll do it myself. All right, I will start reading the QA myself. First question is, remind me to record. Oh.
I'm on.
Oh, okay.
First minutes up. All right. Don't see volatility burst in ProScan.
Okay, sure. So it's actually called, let me share my screen. It's actually called technical long strangles. That's the name for it.
Technical long strangles.
Mm-hmm.
Could you please explain how does it compute the total return, wins, losses, etc. in the panel?
Yeah, so total return is the amount of money you've made divided by the amount of money. Oh, the total return is the amount of money you've made in the backtest. The backtest is one. The return is the amount of money that's been made versus the amount that has been risked. And we do use standard margin rules, so we're not ignoring margin. Wins and losses are when a trade is opened and then closed. Was it positive or negative? And that's how you get wins and losses. And you can see all of that, of course, in here. So this is just one trade. Here's a good example. This trade opened. Oh, this is a rather complicated trade. Let's just do a call. Okay, this trade lost. So you go here. This trade opened for $3.40, ended at 14 cents. That's clearly a loss.
Mm-hmm. And if you need to, you can go to the Learn tab and review the article on calculating percent return. Okay, are you guys ever going to add some of the most simple indicators like price signals or ATR for the backtest trade? It's very frustrating not being able to backtest simple legacy indicators.
Probably not in the near term. No, we've done polling and we see what in general people want and don't want. We're starting to get feedback that the more we add, the worse it's getting in a certain sense. Like it's just becoming too much. So for now, probably not. I wouldn't want you to be a TradeMachine member expecting that to happen. In general, will we be adding technicals? I mean, in general, yes, but not in the near term. I would say no.
I am following this session, but I have 40 delta and he has 50. Why?
Yes.
You can adjust the delta. So can you show where the settings are?
Mm-hmm. Yeah, so if you go into this, we'll just do our simple thing where we got long a call and Apple. So if you go to the settings, you change the delta right here. If you want to see all of the deltas, you take out the comma. Doesn't matter. TradeMachine's choking on Apple right now. Doesn't matter. And if you want to just see one delta, then you put it in the middle. Let's say you wanted a 40 delta in the middle, and you put the comma back. So.
Okay. Also risked, percent win, losses, etc. Yeah, that would be on the Learn tab for amount risked. There's an article for amount risked. And then percent win and losses would just be the number of wins or losses out of the number of total trades. So the percentage of win or the percentage of losses, it would be
57 out of 20, 57 out of 27. Sorry, 57 out of 94 is 67%. Sorry, 84.
Can this connect to a brokerage account? Can it carry out automatically the executions? No, so, and I there's a reason you don't want that to happen. Ophir will explain it, but you don't want that to happen.
So there's a few reasons you don't want that to happen. First of all, it creates a security risk for you. Right now, if someone gets your TradeMachine login credentials, I mean, so
then they see your alerts.
Yeah, what does it matter? If they have access to brokerage, it's a whole nother issue. But also, guys, when you're trading options, you don't do things in an automated way unless you're trading things that are 1 penny wide, right? You don't just see something and say, oh, okay, I want to do it for that price. You don't do market orders. You don't pay the offer. You don't pay the ask and sell at the bid. And if you're doing automated trading, you're basically guaranteeing what you've done is you've created a machine that's going to very slowly transfer wealth from you to the brokerage. So you got to be really careful with that.
Yeah.
And I know a lot of places, some places offer that. They don't, in my opinion, they don't have your best interest at heart. It's my opinion.
Yeah, it might make it easier. It doesn't mean that it's good for you. Okay, can TradeMachine be used for intraday backtesting? No, we only have end of day prices right now.
Although alerts are intraday. Alerts are intraday, but yes. The
yeah.
backtests are based on, yep.
Backtesting is using 15 minutes before the close prices for all entries and exits. Custom earnings handling is calendar days 7 rather than trading days 5. Yeah, so that there is a Learn article on that. Custom earnings handling is calendar days if it's greater than or equal to 7 days. If it's less than or equal to 6 days, it will be trading days. And the reason for that is because it's kind of what people want.
Yeah. So most people considered 7 days to be a week. It's Monday. They want to know the Monday before, right? Mm-hmm. But in trading, when they say 3 days, they tend to mean 3 trading days. They don't mean 3 days like it's Monday, okay, that's Friday. They meant Monday, okay, it's Wednesday. So we had to make this break that after 5 days. So the 6th day on is calendar days, but 5 days, 4 days, 3 days, 2 days, and 1 day is trading days. It's really driven by your requests.
Yeah. Will you show a SPX trade on quad witching?
So if you want to test something on a certain date or certain dates, you want to go to the backtest tab and you want to manually enter those dates. So test one at a time, right? Start collecting some data. That's a very good usage of TradeMachine to start collecting unusual dates that it doesn't, kind of out of the box have. That's how you do it. Test them.
Yeah. Someone got a MySQL error, backtesting Apple. Please email support. How this strategy does for ETF or indices?
Yeah. So first of all, backtest it. You can just put in index, but we do have ETF scans in the Pro Scanner. It is they're right here. So there are some of my favorite strategies. It's in particular the 1x2 by 1x2, like it's a go-to. Must be happening.
Maybe Ophira should explain that pesky error that keeps popping up longtime TM users. No, it's not typical, but it might be off-putting to those new to TM.
I think it was a usage error because everyone was mimicking what I was doing. So I have thousands of people mimicking exactly what I'm doing. It was causing error. That's my best guess.
Yeah. Hi, this is a great tool, but can you speak to how we integrate with them to trade platforms? How we navigate trade entry? Do you recommend a platform? Can the system take your selected basket of strategies and generate a trade list?
So the way you want to bridge TradeMachine with your brokerage is that once you find a strategy you like, let's do 6 months here. Just getting longer calls is just a stupid strategy. Oh, that is not, it's just not a happy stock today, huh? Okay, so like you see NVIDIA and you're like, oh yeah, I want to do this. So what you would do is you would say, show this is getting along a 40 delta call. So you would go to show options chain. This is 14 days away. You say, okay, show me the expiration that's close to the 14 days. That's 13 days. And I'm looking for 40 delta. So I'm looking at delta, boom, 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 42 or 39. 39 is closer to 40 than 42. It's this option. That connects you to your brokers. And then you're looking to trade that option. The March 25th, 230 strike.
Yeah, and as for like option selection, it's just basic arithmetic for TradeMachine. It just chooses whatever's closest to the settings you have set. So whatever is the closest to the day's expiration that you have set, whatever is closest to the delta that you have set. Does the alert on dollar cost averaging alert you that your conditions, time, and technicals are met and it's time to buy? Not time, but technicals. For time, you'd have to set a calendar alert. For dollar cost averaging, So DCA over here.
Okay.
If you set an alert for that and you have technical conditions, it's going to let you know when your technical conditions are met.
Let me change the technical.
But as far as if you have that like entry point where it's like every 15 days, you would have to manually set a calendar notice every 15 days and then check if your technical conditions were met on that day, if that makes sense.
So
I hope that makes sense.
NVIDIA on calendar day. I want to get an alert on the 16th, right? That's how you do it. Remember,
Yeah.
TradeMachine alerts can function as your Google Calendar if you want. I use them. Like I just want to know when a stock goes to 100 or when it's 17 days later, like I just use it. So you can just send plain old calendar or stock price alerts like, hey, I just want to know when a stock price goes below 100.
Yeah, you kind of have to stack it in that case. We don't have the functionality to say like 15 days from this date, if the stock is above 50-day moving average, then alert me. No, we don't have that. So you'd have to stack your alerts in that case. Great for technical and backtesting strategy, but what about filters for fundamentals? Oh, yeah, well, we're not talking about that today, but we have a new product coming out, so that will have fundamental data, but not for backtesting. It will be for traders. Under the Learn tab, can you ask which stocks perform the best in a raising interest environment?
No, so the Learn
no.
tab, the Learn tab is designed how to use TradeMachine. It's not for trade results. That would be you doing some backtesting.
Yeah. Yeah, you choose like the dates. We only have data from 2007. 2007 or 2012?
January 1st, 2007.
Actually, I think it's like February 2nd or something.
Okay.
For some reason, we're for some tickers, but some tickers have January data.
Okay.
That would be our data provider, not us. Very strange. But yeah, you would choose points in time where there is a raising interest environment, and then you backtest using that point of entry, like that period of time. And can you show a backtest? Show where you can edit the custom entry and exit dates.
Oh, right here. Yeah.
We pulled it out from settings so that it's on the backtest tab, but just in case you guys didn't know, like you can do 6 months from today's date, 1 year from today's date, or you can put in your custom. Also, I think we have a 2007 to.
Yeah, right here. But if you want to test like the Great Recession, what you'd want to do is just for example, you go to 2007, it started in September. And then you would go through 2009, it ended March 31st, basically. And now if you're testing in this range, now you're testing a straight up bear market, like a screaming hurricane bear market. You can start testing strategies.
Yeah. Could you show some of your good already built strategies, please? Well, that would be pro scan.
Yeah.
I mean, we backtest. So our research team has like backtested like thousands of strategies. Only a few make it to the pro scan or today tab. So if they made it there, that means there was statistical significance for their performance, I will say, over the course of multiple market conditions. Yeah. So yeah, pro scan tab. And then you can kind of like, when you see that, you can run. I mean, some of these are just basic strategies. That's okay, but like the custom strategies, like technical settings and stuff. If you run a scan on any of these strategies and just open a link, you'll be able to examine the conditions for those strategies. And most of them are also on the Learn tab, so that you can see like. Yeah, like bull mammoth, bear mammoth, bull and bear squeeze are on the Learn tab. Those are like those are custom indicators, but not like technical indicators. Like, well, they're technical indicators, but it's a little more complicated.
This is Bollinger by the dip. You would just click on it and say, okay, well, what the hell am I looking at? So you let it load.
Yeah.
And then you would just go to the technicals and be like, Oh, okay. It's a certain Bollinger bandwidth and things like that.
Yep. Yeah. Don't be
Or go
scared
to
to
learn,
push
or go to
buttons.
learn tab, or go to learn.
Or go to the learn tab, but just don't be scared to push buttons. The worst thing that happens is that you're going to alter the back test, and then you can just like
Go back.
open the link again or go back. Like, just it's. I like to tell people it's like a giant calculator. Just push buttons and do whatever you want. Like, there's no way you're going to break it.
Yeah.
And if you break it, email our support team. You won't break it for everybody else. It'll just be for you. Will we be receiving a recording of this webinar? Yes, it is recorded and we will email it as soon as available. How about the bearish burst strategy? How would you adjust the conditions? Oh.
Yeah, so I would go to the Pro Scan tab. I would go to bearish technical bursts. I would, oh, I have to choose a ticker group. Okay. I would bring it up. Let's do this together. I would go to my portfolio, which is the mega caps, which I created myself. I would do it over the last 6 months. I just let it run. This will be interesting. It's very hard to have a bearish strategy that works ever. Even in a bear market, it's unbelievable. You can go to the Great Recession, September 2007 to March 2009, and nothing works there either. It's crazy. It's really hard to be bearish. It's a lot easier to be short, but to be short-term, short bursts, as you guys can see, we're in a raging bear market now, and you can see we have these crazy updates which just blow out any kind of short-term option strategies. Very, very hard to do short bursts of bearishness. So, okay, this is the bearish strategy over the last 6 months. Okay, all right. Like obviously spectacularly well, good. And then you could go here, say, all right. Let us add, let's just say the VIX is above 30. Then you can run it again and see what happens. It'll be a lot fewer trades, right? That's the idea. So I would actually have changed the technicals a little bit too, like I changed them for the volatility burst. So this is not really what I would use, but anyway, that's how you do it. So I would have to here. It would be when the stock crosses down the 10-day EMA and the stock was already below 200-day SMA, right? And the 14-day RSI is above 30. We don't sound something oversold for sure. So that this is kind of how I would do it. Right. And this would be walking in the rain. Right. So we're starting to see it. We're starting to see fewer trades, but they're kind of percolating in. Like, right. So I guess we could wait this out if we want. It's hypnotic.
Also, you have the ability to backtest more tickers than TradeMachine
Yeah, I
members.
think this is, I'm not even sure if this is more than 100. It's definitely more than 50. TradeMachine members, you can do 50.
Yeah.
Platinum members can do 100. I can do infinity. So
yeah.
I'm not sure where this comes in. So
same. But I don't want people to get confused because we're like running backtests on like 500 tickers. They're like, I can't do that. I'm like, no, that's perks of working for us. You can send your resume to Discord if you want.
All right, so remember the average trade is 23% and there were more losses than wins. Now the win rate 64% and it's 20%. So exact same thing. I'm taking the situation we're in with an elevated VIX. I'm adjusting the technicals because everything's below the 200-day moving average and every strategy is getting better, whether it's bearish, even the bullish one for earnings, it's volatility. So it's a good question, right? Bearish working better, bullish working better, volatility working better. Understand what's changing, reflect that in your trading while still honoring the ethos of the trade. It's same trade.
How granular is days to expiration? Can we compare strategies with 1 day to expiration versus 2 days to expiration, or only those with days to expiration 1 week, 2 weeks, 3 weeks?
No, so remember days.
No, yeah. So it's going to use real options. So if there's not a 1 day to expiration, it's going to pick the closest to that. So like picking between 1 and 2 days is probably going to be the same exact option. So like we're not like back testing hypotheticals. We're back testing real options with real expirations and real prices. So like you can put in whatever you want, but TradeMachine is going to pick whatever on the day of your trigger was closest.
Yeah.
So like I think this is a point of confusion for a lot of new users. So sometimes like days to expiration does not determine whether there's an open or not. It does not. Like days to expiration is just whatever option is closest to your days to expiration when your open trigger occurs.
Another way to say that is we do not have an open when condition. We do not have an open when condition. The option is 1 day. Open when option 1 day from expiration. We don't have that.
Right. Like open when is for like technicals, or even just if you have a rolling back test, that's fine. But we do not have like only open when there is an option that is expiring in 1 day. We don't have that.
We do have closing though.
So,
You can close after 1 day or 2 days or 3 days. That would be fine. So down here,
right.
closing. So.
But you wouldn't be able to back test opening only when an option is expiring in 1 day. So if that's what you're looking for, probably not for you. I won't go into time decay and all that good stuff right now. Is there a written manual, or is everything video support? It's a mishmash. Like in areas where we think video is probably best, we have videos, and then there's also written stuff. It's all on the Learn tab, and
so for example,
that's available even for non-members. You can go to learn.trademachine.com and you can explore all of the tutorials before you ever sign up, so that you know how to use the product before you sign up for it. Just for anybody who's not actually a member, if you happen to sneak onto this webinar. Yeah, it's kind of a mishmash. So there's videos and there's written articles. We're always expanding that. And if you have questions, just email support. Our support team's like so friendly. They're so nice. They answer questions very quickly. Well, as quickly as they can. Like not on the weekends, but on weekdays. Why not change the mechanics to be the same as Backtester? Because a lot can change. A lot of change happens 15 minutes on market close. I mean, that's why we use 15-minute, because that's when, yeah.
That's when the most fun. Yeah. So I can fix this.
Yeah.
So back testing is a very, it's a very rules-based practice. And right. So if you don't choose a time and you just say whenever it happens, then someone who sees the trade at 10:03 will have a different result than someone that sees the trade at 10:06, right? We can't, but that's not how computational finance works. It's definite. So 15 minutes before the close, that's it every time. And then there's no question like, oh, I'm half an hour late on this. Should I still take it? No such thing. There's one time and one time only to enter, and one time only to exit. That's it. And because it's so definite, it can give you confidence in the results you're getting that they're actually replicable. Well, let's say more confidence, I don't know.
Okay, that one's answered. What are your thoughts on selling premium in a high VIX environment? Any strategies you like for selling premium?
I would back test it. The 1x2 by 1x2 is a premium selling strategy. I'm okay with selling put spreads, but you've got to know what you're doing. It's very much what I just did. Take a trade that usually works for you and then say, okay, what has changed? VIX is over 30, implied volatility of specific companies are higher. Everything's below its 200-day moving average. How do I do the same thing, same trade, but adjust for a new environment? So the strategy stays the same. The technical open is adjusted just a little bit, just like I did it for the last 3 strategies. Exact same thing. You guys can do this. I'm 100% sure of it.
This is the golden question. I really like this idea of altering the strategies for the new market conditions we find ourselves in. Any insights into how someone who traded the 14-day pre-earnings diagonal could have known to switch? My problem was that I kept thinking the higher volatility was temporary. Man.
So
wish we had an indicator for that.
this gets into a little bit of kind of observing it. So the reason I was focusing on what's happened in 2022, while also looking what happened the last 2 years, is it takes about a year to figure out something's not right. So that's why I wasn't saying, look how good it did in 2020. Not really fair. By the time we're in 2022, it was time to adjust. Many option traders started adjusting to this new environment. Either they stopped doing certain trades or they started adjusting to this change. So how do you do it? I would say be thoughtful in your application of TradeMachine. What is this trade? So I have a great slide. Right here. I'm going to share this. Right. What was my trade designed to do?
Mm-hmm.
What has changed now relative to 2 years ago? How can I implement that change while still honoring that trade?
Yeah, the spirit of the strategy.
Still buying volatility, still getting bearish, still getting bullish, right? I did the volatility trade. I was still getting long a strangle. I did the pre-earnings trade. It was still buying a call and selling a call 14 days before earnings. Same construction. The bearish burst, that's just getting long a put or a put spread. Same thing. Same deltas even, right? So always be mindful of where you are. Now, this is going to sound like talking out of both sides of your mouth. Be careful not to chase a regime change. Sometimes things just get wonky. You still keep doing what you're doing. You live, it gets through it, right? Don't keep changing all the time. Like environments don't change that quickly. And it's only in retrospect that they know they have. But we are actually, for option traders, it's going to suck for long-term investors like me on my stock side. But we are clearly in a higher volatility environment. There's no arguing it. It's fine, retrospect or not. Like here we are. There is a war which has changed the energy markets possibly permanently. In the midst of high inflation, when the Fed used a bazooka instead of a squirt gun to get the economy going. We're here. Could you have known in November? Sure. Could you have known in March 2021? I don't know. It's kind of, hindsight is 2020. We don't need it. It's it. We're here. It's clear. It's changed. We're in a different environment.
Because there are limited historical periods within the 10-year TM database where VIX is more than 30 and limited parallels to the depths of decline, speed of decline, focus of sectors being hit, etc., how should we think about the results of these tests? Don't we need a much larger N to be able to place any meaning on the results?
So it's not actually the number, it's the difference. So people talk about statistical significance. They say, I need a million backtests.
Right.
You could if the difference is small. A small difference requires more data in order to have statistical significance. If the differences are larger, then you need a smaller data set. Right? So also, it's not that there's less data in TradeMachine for bearish markets. There's just not very often bearish markets. So we have the Great Recession, we have 2018, we have 2020, and we have what's happening now. That's about as good as it gets. Would you want to use the .com bubble or 9/11? I don't know. Like
probably not.
There weren't weekly options. Things were different. What companies would you test? There's survivorship bias. Like at some point, looking back too far doesn't help.
No, it doesn't. It's different. And I mean, this is one of the reasons why people always email us and they're like, why don't you have bear market strategies? And it's like, we have some, but like in general, like bear strategies don't work. Like, I don't want to be rude about it.
Look, we have one.
For there to be statistical significance, it has to work through multiple market timeframes. So all of these work also through bear markets. I mean, it doesn't mean you're going to win every time that it triggers. It's just that it still has statistical significance in a bear market. Whereas like, exactly, somebody just said markets go up 85% of the time. Yeah, it's really hard to find a bear strategy that works in all market conditions. Like, how do you pick which stocks are going down? Like, how?
Rely on volatility, guys. When VIX is doing something weird, adjust for that weirdness.
And it feels very trite to say because it's hard when the market's going down, when it's a bear market. Everybody's suffering. It's not easy by any means. It's just,
I mean, your option trading should be doing okay.
yeah, your long-term investments aren't going to be doing
No,
great.
you're going to get kicked in the teeth or lower.
No, and that changes. Well, we talk about perspective here at CML a lot. That changes people's perspective with their options trading too. Like if your long-term portfolio is not doing well, you're probably going to be more risk averse, which means you're going to be less likely to take triggers when they trigger. Like we're humans. Like that's just what happens, and it's not easy. That's not what we're saying. It's hard. It's hard. It takes, yeah. Okay, we'll move on. Can you use it for a day trading or intraday time frame? Unfortunately, no. We do not have intraday data for back testing. We have intraday data for real-time alerts. So like the today triggers, your alerts, those are happening with intraday data, but you cannot back test intraday data. And as if we explained a little bit before, you kind of like you kind of don't want to back test intraday. I mean, you would, but like you need like a standard set time frame to be able to back test efficiently. You need rules. If you took every trigger every time it happened, I mean, think about how often stock prices are updated. Just like sit and think about how many stock prices for one ticker happen in one trading day. And then you'll start, like, your mind will be blown. You'll start thinking about it and you'll be like, oh my gosh, yeah, I don't even know if the back test on that is reliable. All right, rules based. Okay, can you tell it, or as Ophir likes to say, write it the fuck down. He likes to say the F word a lot. I like to say rules based. He says F word. Can you tell us anything that is in the works for new features or webinars for TM? Thank you. Yes, we have a 4-part education series, and session 2 will be next Thursday on the 17th.
Session 1 is available, I think, on the Learn tab probably, or it will be, and then session 2, that was for beginners. Yeah,
it was emailed. Yeah, it was emailed to all TradeMachine members, and it will be available on the Learn tab eventually. The only reason it's not there right now is because that's open to the public, and we're trying to make it only available to TradeMachine users. But yeah, there's an education series, and it's great. It's hosted by our CTO, Jason, who's also just brilliant, and he's a great teacher. He's better than Ophir. I know you guys won't say that because you love Ophir and you're obsessed with him, but like Jason's better at teaching. Don't roll your eyes. I saw that.
Jay's very, very good.
For beginners and for people who are just learning options, he's a better fit because he goes slower and he's more deliberate.
More patience.
Now, yeah, he has a lot more patience for the beginner status. So you would never ask him to teach a child, for example, like he'd be the worst kindergarten teacher in the history of the world. But that's happening. So that's for the next month. We're having the 4-part education series. And if people really like that, that might be something that we do. Moving on, new features for TradeMachine. Listen, guys, I really wouldn't stay subscribed or subscribe to TradeMachine thinking that new features are coming, because we put a lot of work into TradeMachine for the last year. You got a brand new interface. Well, I'm just saying we put a lot of like new features in this year. There's a new interface, there's new alert features, there's
live options data.
We extended the ability for backtesting, like we put in IVHV, like these are all based on your feedback. But that said, there's a limit to how much we can put into this one software at a given time. Like it's already overwhelming for people. Like we don't want to put too much in at once. So, but yeah, webinars. I might be able to convince Ophir to do some more advanced options webinars after this beginning education series too. If you guys are into it, like you just have to let us know. And that's another thing for like newer users or people who are returning to TradeMachine. There's a community tab. It's called community on TradeMachine too, right?
Yeah, right here.
Yeah. So there's a community tab. You get to meet other TradeMachine members. You can even, Ophir will hate me for saying this, but you can tag Ophir in your post and ask him questions directly about trades that you're interested in. That's just it's so useful. The TradeMachine community has been absolutely beautiful. I'm not going to go into CML Pro right now, but TradeMachine community is incredibly helpful. It's so useful. And if you guys are like all requesting new features there, like we might consider it. Like, I don't know. That's all I'll say. In the past, you mentioned that within community, there was to be a means to find posters that are referenced more or most. Has that been implemented, and how do we find or tag them to get notifications on their postings? And to what mediums do the notifications go out to, such as SMS, email, only active community webpage, or other means? Yeah, so community is still like, you might want to consider it a beta feature. Like, you kind of have to be logged in. We do have email notifications, but you can't subscribe to notifications for a certain post unless you're the poster. So if you post it and people reply to you, you'll get email. But if you reply to somebody else's post, you're not going to get notifications when people reply to their post. But whenever somebody responds to a post, it gets populated back to the top of the feed. So whenever it's, because you said means to find posters that are referenced more or most, like if they're referenced more or most, they're going to be at the top of the feed because people keep retweeting it. Oh, sorry, I mean reposting it.
You can also click on someone's profile and see like how many followers they have.
Yeah, and then you can subscribe to their profile, and then all you have to do is click the following tab, and you can look kind of like,
yeah, exactly.
You can curate your own feed. Like, that's something that,
hey, Max.
Yeah. All right. But yeah, it's kind of a limited like notification thing right now. Like, you have to be actively logged into the web page. We don't have an app. We might consider developing an app if people were using it. We just have to see what the popularity of community tab is. And
so far,
yeah, it's been 1 year since we launched the official beta test, and next month it'll be 1 year since community's been out. So it's still in the early phases, and some people don't use it. Like, I think everybody should sign up for it. Like, if you have a question, you can crowdsource answers. It's a beautiful feature. It's just, I don't think TradeMachine members are using it that much. Okay. Anyway, moving on. Don't get me started on community. Okay. How to set the deltas to force spreads to be a certain dollar amount between strikes. Yeah, you can't do that.
Only deltas, yeah, not dollars. Yeah. You can kind of guess and check, keep guessing and checking, look at a backtest tile, see how wide they are until you get pretty close, but we can't just say $5.
Yeah, and the reason for that is because, stock prices fluctuate historically. Like, delta is just a more, again, rules-based backtesting, right?
Yeah, I mean, but you think about a stock is at 100, you do a $5 wide backtest, great. Yeah, but historically it was $30. Well, that $5 wide on a $30 stock backtest is a completely different number.
Also, it doesn't take into consideration splits, and it's the whole thing. That's why delta is just much more useful for backtesting. I understand why someone would want to do that, but it's just not. I think like logically, I understand why a lot of people would request certain features like this. It's just that, like, when it comes to backtesting, it's a lot different than actively trading. Like, it's different. Okay, moving on. Not seeing where to set up portfolios. Is there a Learn article? Can't find that either. There should be a Learn article on it, but you just click portfolios and then you hit new if you want to set one up. And then you just put in your tickers in a comma delimited list, name it, and then hit add, and they should show up as like little individual. Yeah, then you can kind of manage it. We try to make it pretty intuitive. There should be a Learn article about that. If not, if you're not seeing portfolios, you're probably a stock TradeMachine member. We don't have portfolios for stock TradeMachine, only for options. But if you're a TradeMachine Pro member and you're not seeing portfolios on the backtest tab, email support, because you should be seeing that. Okay, and that's support@cmlviz.com. Okay, under the Learn tab, can you ask which stocks perform the best in raising interest environment? We already answered that. Is there an article that shows how to use charting features? Charting features.
No,
No, we don't really have that. That'll be kind of with a new platform, I think. We don't really do charting too much.
I
Like
mean, we have powerful charts. We just don't have a thing that shows how to use it.
Yeah, we don't have like pattern recognition on charts or anything like that. But like just over your click draw, so you can open up the tools that you have.
Yeah.
They should be fairly intuitive. If you have questions, you can email support, of course. But yeah, you can mark up any chart that you want. Yeah. Oh no, I closed out the Q&A. Okay. Is there an easier way to compare covered call strategy to just owning the stock rather than separately using two strategies listed, call versus stock? You'd have to just run two backtests and put them side by side in different tabs. Multi-tab is going to be your best run with TradeMachine. Like if you're trying to compare different strategies.
Yeah, I have two backtest tabs open all the time. That's actually why they pop open to new tabs, because that's a power user is doing this all the time.
Yeah, at any given time, I have probably 50 tabs open between different windows, depending on what I'm doing. Like, it would be kind of cool if we could do that, though. We'll consider it. We'll see. Fierce, like, don't put more on my list. Is there a way to backtest trades by a set dollar risk rather than set number of contracts? Only with DCA. So stock dollar cost average, you can do that, but with options trading, not so much. And again, that's just because prices fluctuate historically. It doesn't give you an adequate back test. Like it wouldn't give you an actual idea of what that strategy is performing at, right? Like that the whole point is for it to give you an actual realistic interpretation of if you took this trade, what would have done. And when you do that historically, if you put limits like that in, like it's not the same.
I actually see one question that I'll address right here. You can keep going. Someone is asking. I forgot we have some people who are not necessarily members. That's how you get it.
Oh, yeah. Where can I find the CML option training sessions? Those are emailed to you.
Ask support for the first one.
Yeah, support will give you the recording. We've only done one. It was last Saturday. The next one will be on Thursday. For the previous options webinars, like how to speculate with options, for example, you can find that on the webinar section on the Learn tab. But for these newer ones, they're not on the Learn tab yet. So you have to register. Well, you'll get an email and you register for the Zoom conference, kind of like what you're doing right now, and then you'll get access to it. And then if you're a member, you'll get an email with a recording afterwards. Whoa, what are you doing?
Sorry.
Oh, that's such a cute look. Look at you. Earlier there was a slide about find volatility burst, get in and get out. How do you determine when to get in and when to get out?
Oh, well, that's
well, get in is a trigger, yeah.
And get out is too. So you go to the Pro Scan tab, go to just pick a group of tickers, doesn't matter. Go to long strangles, technical long strangles, look at any ticker. All right, so what are the open rules? Here are the open rules. That's one. That's not the new one. Right? That's not the adjusted one. And then how do I get out? Right down here. So it's always on the backtest. The rules are always there. For the new one, I'll just, someone asked me this. Let's say, That's the new stuff.
Mhm. Yep. Great. You should post that in community
I
right
did.
now so people can reference it.
I
Oh,
did, yeah. Sure. That's
look
what I
at
was.
you. You're so efficient. I just love it.
Go further. New calendar.
Really. Okay. All right, moving on. Could you explain the squeeze scan? Scan, sorry, not stand. It's on the Learn tab.
It is.
There's a beautiful video that John Carter actually did. It's a derivative of John Carter's.
I think that it got deleted. Oh, there it is.
No. Yeah. We
Oh, here. Really long.
we altered it a little bit from John Carter's squeeze scan. We just optimized it just a little bit to make it better. And I think
Which-
that might have been
That was stupid.
confusing for some people.
That was
It's
my
not
mistake.
stupid. Well, okay, let's just say it's not stupid. It performs better, but it confused people. So
Not better
just
enough. It's like changing, it's like saying, yeah, it's
Oh,
like
if you're
changing the formula for
better,
Coke.
better is better.
I
Better is better.
was too clever.
Better is better. Okay, when picking a delta, example 40 delta, if the choices are actually 38 and 42, what do you select? Oh, okay, so yeah, mathematically it'll be whatever's closest. Then if it's 38 and 42, you choose whatever's closest to the day's expiration that you have set. So
No,
if it's 14 days.
It's not just that. Just so you know, even though it says 38 and 42, delta comes in like 18 digits. So it's not actually ever a tie, just so you know. It's 38.
No, sometimes, okay, no, but sometimes it is a tie, and we have rules in TradeMachine about that. So first it's delta, then it's day's expiration, then after that, there is a rule. You can email support. We have a canned response for it, just so you have the rule, but like that never happens, so I can't remember it. I feel like somebody's texting me trying to tell me what it is. Oh, no. That was somebody asking me if I wanted to buy a handbag. TMI. No, there is a rule, but like it never happens that delta and day's expiration are the exact same. But if you want to know what the third rule is, you can email support. It's something very clever that Jason came up with because he's much more cleverer than up here. No, you don't want to react to that one. I'm just kidding. I just like to give him shit because he's my husband. Okay, is your today covers the how to run in rain strategy. Oh, does the today tab cover the how to run in the rain strategy? No, you'd have to set manual alerts for those. And the reason for that is because, Sophia.
Well, it's not always raining, guys. I want you to think.
Yeah.
I said not take out Seattle, take out Washington and Oregon. We don't want strategies on just when it's raining. We should know when it is raining. But as awful as this seems, like this does not last very long. It's a volatility regimes are about usually about 18 months maximum, and I'd say we hit a new volatility regime. What would you guys say? September
November?
or October? September or
Oh,
October.
that's so funny. I said November. But you're right. Yeah. Okay. Are stock prices in real time? For the alerts, they are. Not for the backtesting. Although the last candle does update now in real time. And yeah. we do have the current stock price in there now. We did add that.
And that's real time.
So, and that's real time. So like in the upper left-hand corner, you can't see it right now because you're zoomed in for some reason.
Right here. Oh, no. Sorry.
No, my iPad's weird then. Yeah, I can't see that on my iPad, but wherever that is, there is an intraday updating stock price. That's in real time.
It's real time. It's straight from the exchange.
Yeah. But the back testing is based on adjusted close price 15 minutes before the close.
Right.
I hope that answers. If that didn't adequately answer what you're asking, just ask again maybe and let us know. Recently saw a claim that CML would have something to compete against MarketSwift. Is this true? If so, what is that product? Yeah, we are. We're creating a technical trader platform with pattern recognition. It's not just MarketSmith. We're actually like we're making one sub that will replace like TrendSpider and IBD, like so that you can have all the information in one place. It'll have fundamental data and chart pattern recognition and all just everything that IBD has. MarketSmith, sorry. It's gonna be amazing, but it's not
New technology, faster, 60 to 80% cheaper, and have more.
Yeah, but it's not a product yet.
No, just don't hold your breath. Do not hold your breath.
No, we're hoping by the end of this year, but don't hold us to that, because I always yell at Ophir about saying that, and we actually talked about it before this webinar, and now I'm saying it even though I told him not to say it. So like he will use this video recording as evidence against me when I pitch at him.
Thanks, guys. I appreciate it.
It's we're not there yet, but we're working on it, and it's gonna have more. It's gonna have more, and it's gonna be cheaper, and I am so excited about it. We're doing so much market research on it. We don't even have a name. That's how new the product is. And if you have a name suggestion, pop it in community, because I'm struggling at coming up with a name for it. So
I have a name for it.
I'm sure you do. You have a name for everything. Okay, someone entered a question in chat, but repeating it here just to be sure it's covered. Could you explain the squeeze scan, bull and bear? Yeah, it's on the Learn tab. It's a very complicated technical indicator that's customized, but you can read about it. That one and Mammoth on the Learn tab, and it goes really into the details.
Mammoth in particular. Mammoth is like
Mammoth gives you like gosh, Mammoth's so confusing for anyone.
It's a flashlight up your colon, like it's details.
Dude, too much detail over here. Really didn't. Nobody needed to hear that. No one wants to envision that.
Well, okay. You're the one who just said envision. I did not say envision.
Well, when you say it, people are going to start imagining it. And now I'm imagining a flashlight up someone's colon. You know who can attest to that? Probably a proctologist. Okay, we're moving on. You did it, not me. Do you have SPX options?
Yes. Do
you have analysis specifically to trade the 3 times a week SPY, IWM, QQQ options?
Yes. You go to the Pro Scan tab. It's also on the Learn tab. Go to all tickers, click this thing, go to it. It's a beast of a back test. It's really, this is like the like Olympic bodybuilding. They say, okay, well, what is it? So technicals are here, fairly involved. I'm not going to keep it up too long because we have non-TradeMachine members here. The strategy, right? And again, but we also, because it's so complex, on the Learn tab, we have the ETF right here. So
yeah, and there's a video, and then I just highlighted that article. People were asking where the article was, but it was on there, but people didn't see it. Just scroll down a little bit to show that box. Yeah, you can read about it on that article.
Oh, right here.
Yeah. All right. Can you explain the trade for ProScan ETF technical ratios? Oh, yeah.
Next.
Sort by average trade return, then select SPY. Yeah. That's the strategy. Just do technical ratio spread on Learn tab, and you can read all of the details or watch them. I noticed that the 10 EMA and other EMAs you use are different for the same value. For the same EMAs on Thinkorswim. Why is that? We use adjusted close price, which is just a more accurate way of talking about like what the stock is actually trading at that day. So it takes into consideration like splits and adjustments and all that good stuff.
Yeah, Thinkorswim is
Thinkorswim
just
doesn't.
Thinkorswim is
And
amazing.
no,
Thinkorswim is amazing. But we really looked hardcore. I'm talking decimal by decimal, and we're convinced ours is more accurate. Having said that, Thinkorswim is amazing.
Yeah, it's nothing against Thinkorswim. They just don't use adjusted close price. They use close price, which is just it's not the same. But for back testing, you need to use the adjusted close because all of those things affect how the back test would perform, right? So that's why there's a difference. And
should be minimal.
Usually it should be minimal, but sometimes it's not. And in those situations where it's not,
oh, also
you probably want to know.
We also use real time. So if it's Wednesday,
right.
if it's 9 o'clock on a Wednesday, we're using Wednesday as a part of the 10-day EMA. The 10th day is Wednesday. We don't stop at Tuesday, which most places do. Like, we just take it very, very seriously.
Yeah, if there's one thing that we do, like, have a little bit of OCD on, it's data. And so, yeah, that's the thing. Thinkorswim's great. That's one of those that we get emailed on a lot because they don't use adjusted close and don't use real-time close for their moving average calculations. Nothing wrong with it if that's what they want to do, but we're back testing here, so it's different. So that's why there's a discrepancy there. The market usually goes up, but what is Ophir's favorite bear strategy?
Volatility burst. Yeah, it's not really bearish. It's just it's what I showed you, and then I call it walking in the rain and how I switch it. But that's been, you can look at any webinar I've ever had and I talk about it. Like, it's just, that's it.
Is there a means to have all the custom behind the scenes strategies such as 1 by 1, 2 by 2 by 1, 1 by 1, 2 by 1, etc. when we click on the custom button on the backtest page?
Oh, you mean pre-populate it? I mean, no.
Well, kind of. Oh, not pre-populated, but as soon as you open a link that's using a strategy, it saves it to your strategy.
Yes. So everybody has this strategy the second they click on it. You click on it, you're on the backtest tab, automatically you're going to have something called QA1. But the reason we put QA in front of it is it lets you know that it's a CML strategy. So if it says QA, that's us. So automatically you go to your strategy list, there's going to be a QA. You can see there's a lot of them. QA, right? Those are all.
Okay, you should, just don't trust that too much, because now that you said it out loud, somebody's going to put QA in front of their strategy and try to pass it off as a CML strategy. Like, just pay attention to what you're doing. Like, I don't want anybody to get screwed because somebody decides to be a bad actor. Just saying it out loud.
Hear that?
Does TM have fib levels, and how can we view them? We have Fibonacci levels on our pivot points. That's on the create tab.
Yeah, create.
You can't backtest with Fibonacci though.
Show pivot points. Here's the Fibonacci's.
Can you add that to a stock chart? I actually don't know if that's on our indicators thing.
Yeah, so
we can't. You can't backtest with fib levels.
Yeah, you can. So watch this. So I'm going to update the chart. I'm going to draw on the chart.
Yeah, that's what I'm wondering, if you can draw Fibonacci on the stock chart.
How do I get the hell out of...
Turn off pivot points.
Oh, thanks.
What did you do?
No, it's good. Now I go to draw.
I thought it was.
Here we go. Yeah, you can do the Fibonacci retracements right here. So you can draw it on the charts,
but you can't backtest with it.
Yeah.
I'm wondering if that would be useful. Okay, that's a breakfast conversation for us. Can you show if TradeMachine can backtest for Ion Condor or for only results?
Yeah, I don't understand. It's like, yes. So
yeah, I don't know what only results means, but yeah,
Iron Condor is right there.
Condor.
Yep.
Yeah.
You can test. It's actually built in. So if you want to do, you want to get, I don't know, short a Apple's just foobar right now, so I'm just going to use NVIDIA. Take out the technicals.
Yeah, what's going on with Apple?
So here's like getting short an iron condor. This is a monster back test. It's 4 legs, so it's going to spin for a while. But you can definitely test iron condors, and you change the deltas just like you always do in the settings. So yeah, I don't think a 40-30 is what people are really interested in. More like a anyway, yes, you can backtest iron condor.
How would you scan for butterfly and iron condor expiring in 10 days trades? Yeah, you can't really do that.
Well, you can do a scan.
It's not a scanner. Like, I mean, it's a scanner for backtested strategies, but you cannot scan for upcoming trades. I mean, you'd have to set an alert, and you can't set an alert for expiring in 10 days. We can't set alerts for day's expiration. Those kind of like calendar back tests we can't do. You can kind of like finagle it by like putting in like close trade when and then choosing a calendar date, and then you can kind of hack it, but it won't be exact. But we don't do calendar back tests. Maybe in the future. What is a platinum subscription? Is that the yearly subscription? Yeah, you have to be an annual subscriber. Platinum is discontinued. You can't subscribe to it anymore. It might open back up if Ophir approves it. I've been begging him to approve it for people. It's not really that fancy. It's the exact same thing as TradeMachine Pro. You can just backtest 100 tickers instead of 50. It requires an annual commitment. So, and you don't get a price discount on the annual
Quite the opposite.
commitment.
We make sure there is no discount.
Yeah,
it's 12 times the monthly rate.
Yeah, it's whatever you're paying times 12. And you get a backtest 100 tickers. But I mean, you can just, I don't want to discourage people from wanting platinum because I know people want it, but you could just like put 2 portfolios of 50 tickers and put them in 2 different tabs and kind of cross compare them. I guess it's not quite the same, but I mean, it's similar. But yeah, it might be coming back. It's not available right now, but it's literally the same thing as TradeMachine Pro. We wanted
more power.
to, yeah, just a little bit more power. We wanted to make that available to people, and people didn't want to commit to annual. So that was the thing. Can we overlay the bear market conditions over all the today tab triggers from one bulk action? No. Today tab is pre-built, but you can do that and then set custom alerts for the bear market triggers. Okay, some people just rely on the today tab. I would really populate your alerts portfolio. Like, I think that's an underused aspect of TradeMachine, which is amazingly surprising to me because you can set an alert for whatever you want.
Well, I'll go a step further. Here's the encouragement to set alerts. So we can tell if someone's going to cancel based on the number of alerts they've set. But why do people actually cancel anything? Because it's not making them money.
Right.
So we can actually tell when people aren't making money on TradeMachine because they're not setting alerts. People that set alerts don't really cancel.
But it's not just that. Like, if you're not setting alerts, that probably means you're not doing your research to backtest. Like this, if you're looking for a trading service that gives you trades to make, this probably isn't the software for you. We do have that, and then you can like add alerts from ProScan too. We have some of that, but like this is really for like people who want to take it seriously. If you like the idea of trading options, but you're not actually going to put the work in, this isn't going to be for you. And I don't, there's no judgment in that statement. I'm just saying it matter of factly. This is for people who want to actually trade options and want to know what they're doing.
I'll go a step further. If you're not willing to pay your tuition to go from beginner to intermediate in dollars, and then you're not willing to pay your tuition in time to get from intermediate to advanced, just stop trading options. You can do everything else. Just trade other stuff. It's just, you're gonna lose money. You have to know what you're doing.
Options require work. Like, that is the one thing that like we can't give you a shortcut to.
Well,
if you want,
we give them the apparatus. Here's the apparatus to do it.
Yeah, exactly. But if you want to trade options and be profitable, it will require work on your part. and we can't undo that. Like you'll have to look. Yeah. So like if you're looking for somebody to tell you what to trade, when to trade, that's not what the service is. There are services that do that. There are options traders who just say, hey, I'm taking this options trade, and they tell you what they're doing, and then you can follow them if you want to.
Go for it.
We just don't do that. We're very much a teach a man to fish, not give him a fish kind of company. And if that's okay, some people don't have the time to learn or invest the time to put into becoming an expert. Like that's okay. Like you do you, boo. Like we're okay with that. Like
I just want people to be
it's just
successful. That's all I care about.
we want to give people the tools if they're willing to, and there's no it's no judgment. If you want somebody to tell you what to trade, there are lots of services that do that. I can't tell you about whether it's a win or not. Like,
Yeah.
well, there are certain strategies like the TTM squeeze that we've incorporated into the backtester, but I mean, I would just say if I was going for that, I would at least subscribe to TradeMachine to backtest what these people are telling you to do.
It's a good idea.
Maybe just for 3 months, you know, like then cancel. Like I'm not telling you to cancel your account, but like at least try. Yeah. What does NAN% mean? Oh, that just means that there's no data. That's an error.
Not an error. Not an error. NAN means.
Well, it doesn't mean it's an error. It can be an error, but it just means there's no data. So that might mean no trades were taken during your backtest period.
Just so you guys know, in technology, NAN means not a number. So you can't calculate a percentage on a zero. So that's all it means, not a number. There was no trade.
What's the percent win rate on this? Oh, that must have been during live. I have no idea which backtest. Yeah. If you remember which backtest, you can ask Ophir.
No, you can just do it yourself. We have a backtester here. Use it.
Yeah. Oh. Okay, Salty. Okay, what about if there is a low open interest? Does the system warn you if low OI?
Okay. Wait, this opened up a can of worms. Okay.
Yeah, don't even get.
I am going
started.
to. So I cannot.
Oh my god.
I cannot not help
myself.
People.
I can't.
I cannot.
Okay.
I'd rather be dead than not help people. Okay.
All right. Well, I'm going to mute myself.
The question, the heart of the question is there a warning if there's poor liquidity? It's not really about open interest, but for liquidity. Open interest and volume have nothing to do with liquidity. Liquidity in the option market is defined by two things and two things only. One, the width of the NBBO, the width of the national best bid and offer. So the width of the bid and offer. That's one. Number two, the depth. Right? If something is $1 to $1.05, that sounds like it's liquid, but what if there's only 10 options? Right? So $1 to $1.05 with 10,000 options on each side, that has great liquidity. It doesn't matter if there's open interest or volume. It has nothing to do with it. People who say that open interest and volume have to do with liquidity are wrong. It tends to be that when there is good liquidity, there is higher open interest and volume, but one does not require the other. There are many lines with a lot of open interest and a lot of volume, and they have terrible liquidity, dollar wide. And we know that happens because when the market goes haywire and people like GME, people are speculating, those markets are $3 wide, 10 up, and there's huge volume and open interest. So don't do that. Now, the question, to answer your question, does TradeMachine warn you if there's poor liquidity? Yes. TradeMachine will tell you when the options being used in the backtest are wide, it'll be a red error. It'll still make the computations, but it'll be a red error and says, hey, just so you know, this option on this date had this price and it's wide. We're not sure how reliable these prices are, but please, liquidity is the width and depth of the NBBO, and it is nothing else. There are too many amateurs teaching option trading, and it's just destroying people. It really hurts my feelings. Go ahead.
Okay, we're moving on before you get really tired.
I don't like it when people get cheated.
I know. Will this be recorded and sent out, please? Yes, it will. Thanks. Okay, you're welcome. Are you going to add these higher volatility trade alerts to the day page, or do we have to set our own alerts? Yeah, you have to set your own alerts, and that's only because
It doesn't
don't
rain
have
every day.
they don't have statistical significance across multiple market conditions.
It only works. There's nothing happening when you say the VIX has to be over 30. IV percentiles to be over 85. There's nothing happening for years. Just quiet. Crickets. And then it's raining.
Yep.
Look, this may sound trite. It doesn't, I don't mean it to be. This is a very, very good time to be trading options, in my opinion. This is like what you wait for as an option trader. As a stock investor, it sucks. Terrible. Terrible. But for options, this is our time. This is it. You control risk. You don't go too big. You're not reactive. You're proactive. You write your plan down. You write it the fuck down. But this is our time. Elevated volatility is our time. These should be the best few months of your trading. Like right here. February, March, April, make your year. Don't be stupid. Small, controlled bets. I'm saying it's a repetition of good trades, not big trades. This is our time.
Okay. Please explain what you mean. Learn tab is AI driven. Did you?
I said that, yeah.
Did you? It's not really AI driven.
It is a little bit. It takes text. It's natural. It's fine. It's natural language processing. It takes text.
Yeah.
And if you do a search, it's like, oh, I know what you're talking about. That's all I meant. It's not.
Yeah. It'll do suggestive scanning, and then but it's not like.
What I mean is, you don't have to search.
It's not writing articles. AI. It's not AI writing articles or something. That's on me. Okay. Do you change the triggers for the Today tab to reflect changing conditions and financial weather? I mean, a trigger is a trigger, so we can't change that. Like,
no, we don't. We don't change the model.
Yeah, it's. I'll just say it's always good to watch your meteorologist. Like, the model doesn't change. The model is used across market conditions, but just because it has statistical significance doesn't mean it's going to work in the current conditions. So, like, you should be aware of current market conditions before you ever take a trade, always. I mean, that goes for any software, not just ours. Like, again, it's just one of those things, like, you have to pay attention to what's going on. If we changed what was going on in the Today tab based on market conditions, it would become a trading service, not.
It would also be subjective.
Not a research tool.
A backtest is objective. It would be subject. I would be then saying, I'd be imposing on you as members. Right. I think it's changed, and therefore I'm changing the Today tab. And you might say, exactly. No, I don't think it's. I think this is temporary. That's not fair.
Yeah.
I don't.
Yeah.
Have,
again, this.
I don't exercise that power over you. So.
No, like, again, this is the difference between like us and, like, it doesn't mean that we're better. I'm not saying that. Some people want just somebody to tell them what to trade, but that's the like, I think people subscribe to us thinking that they're going to get just told what to do. Like, we're definitely not that. So, like, if that's what you're thinking you're getting, I would not do that.
But once in a while, we'll give webinars and I'll tell you what I see is changing like this. So.
Right. Yeah. And probably more often.
Yeah.
As we move on, like, feedback's coming that you guys really actually enjoy this, which we're surprised about. Like,
I try not to infect TradeMachine with my subjectivity, because it's a box of objectivity. Just this happened in the past.
It is a calculator.
Yeah. So, but if you guys want my subjectivity, which is more like CML Pro for stocks, like I can add it, but there's still a core underlying principle to TradeMachine that it is not about me. It is about you. It's really important to me that you get good at option trading. I make money when you do good at option trading, and not because you're subscribed to TradeMachine. I mean, that helps too, please. But the more good
it's also because you're trading these strategies.
The more good option traders there are, right? Then people don't blow out. If you don't blow out, right, then the number of option traders goes like this. But it goes like this because there's this many in, out, in, out. If the people aren't blowing out and the number of option traders is going up, okay, then the volume starts going up. And if the volume starts going up, then there's more money being made by market makers. And if there's more money being made by market makers, then more market makers come in. And if more market makers come in, then there's more competition for the NBBO. And if there's more competition for the NBBO, it gets narrower and deeper. And that is the definition of liquidity. If you guys are successful option traders, you give the market better liquidity, and that makes me more money. Also makes you more money, by the way.
Have you changed all the today trade alerts to a higher VIX like you showed on the long strangle? No, again, that's something you'd have to do to your personal alerts portfolio. Enjoyed the answer to my question. Thanks. Good job, Will. Please do advanced options trading lesson. Thanks. Yeah.
That's
number. I volunteered you.
That's number 4 in the series, and we're on number 1. Number 2 is March 17th. 2 weeks later is number 3, and then 2 weeks later is number 4.
Yeah. Were you considering covering the blockchain Bitcoin assets? Yeah, I've been bugging the team to get cryptocurrency data into the backtester. We're not sure if we're going to do it or not, or if it's going to be its own backtester. To be honest, I don't think many people want to backtest trading blockchain. No?
People don't backtest dogma. Next.
Some people might. Again, that's one of those things, like if there's enough demand for it, we'll definitely create it. Like we like the tools that you guys want to use. Maybe we'll incorporate the data into TradeMachine Pro. Probably would if we do. I mean, the data is there, so we can just do it. But and then make it also a standalone product for people who don't trade options. But it doesn't seem like it's in that high of demand. So that was the only reason. What class was last night? That was simpler trading, and it was the same webinar. It was for simpler trading. It wasn't us. Ophir just was a guest appearance on that. So it's the same webinar. So you're getting it right now.
It was actually smaller. It was much smaller than what I gave. You
I was going to say you definitely didn't do this Q&A last night.
No, I didn't show the pre-earnings diagonal. I gave enough for people to understand. For people who are willing to put in the effort to learn to be good option traders, I gave enough about TradeMachine such that they would join. If they didn't, it's not my decision.
I'm not savvy with social media platform, had difficulty in registering to the community.
Email support.
I would say email support. They will help you. They're amazing. Our support team's so nice. They're so friendly. It's not like, don't be scared of our support team. They're so nice. I used to be a support, so like, I know, like, as long as you're nice to them. I mean, don't be mean to them, but if you're nice to them, they're just super friendly and helpful, and they're going to be one of your best assets.
This is okay, I think 20-minute warning, 23 minutes.
We have 24 questions. I think some advanced option webinars by Ophir would be awesome. Even more webinars like this one to present what is working in the evolving environment. The TM insights are great for understanding the power of the program. Oh, thank you. See what I volunteered you for, Ophir? Do the drawings on the charts save from day to day? No, unfortunately, you have to keep adding that. That's something we could consider in the future, but that requires a little bit of technology that will bore you. So I won't go into it right now, but we could consider it. How do I add stock volume in my backtest, please?
Yeah, we don't have. That's a good one. If there was something I was going to add, which is we're not right now, but if there was, the number one thing would be volume. It would be aside from all of the ATR. It would be volume. So
yep.
So we don't have it, and I would say I think we have the market covered. That's one thing where it's like, oh, that's a good one. So.
Is the new criteria for long strangle on the today tab, please? No, that's manual works. We've answered that one several times. I'm almost thinking that we should like incorporate the strategy on the today tab as many times as this is getting asked. No, maybe just for now.
I'm not there yet.
See, I asked for you guys, and then Ophir says no. That's just what it is. I ask lots of questions, and Ophir says no. When picking a delta, example 40 delta, are the choices, if the choices are actually 38 and 42, how do you select? Oh, we already answered this. Yeah, mathematically whatever is closest, and then if it's a tie, then it's day's expiration, and if that's a tie, I would email support because I can't remember the third rule, but that never happens. I came in late, but if not already covered, is there a way to screen the today type tickers with volume? No, sorry, we don't. We just answered that. Yeah, we don't have volume right now. That would be the new enhancement. We're going to do one. I did not understand the answer. If there is a 38 and 42 delta and you need to buy a 40 delta, what does that have to do with day's expiration? It doesn't. It's just if there's a 38 and 42, they are mathematically the same distance from 40 because they're both 2 away from 40. So if you're picking between 38 and 42, you're going to pick whichever option's closer to the day's expiration that you have set because there are other conditions of the option that you're selecting.
They'll have the same day's expiration. So the answer is that delta
not always, but
yeah, if you're looking at the same chain, it is. So if it's 38 and 42, it just looks like 38 and 42 to you. Deltas are actually several decimal points. You know, it's actually 38.165965432.
Right.
So.
Yeah, I'm just going by the mechanics of TradeMachine. So TradeMachine does delta first, day's expiration second, and then something else third. That's just it's basically a calculator. It doesn't actually have anything to do with DTE. It's just that's what TradeMachine would do. If it's an exact tie, then it's going to pick the one that's closer to the DTE. But that really,
in any case,
that's never going to happen in a real world.
If it's a 30, if it's a 30 or a 42, if it's a 38 or a 42, doesn't really matter anyway. It just they're both basically 40.
Yeah.
It shouldn't impact your results. Like it will either work or not work, not based on that. It'll either be a good trade or bad trade.
Yeah, that's kind of what I'm saying. It's like for a TradeMachine, the rules for the back testing, it has to have like hard set rules, but for your options trading, like that would be the same trade. I mean, let's be honest, they're close enough. Are you still working on crypto platforms? We just answered that kind of. What's the link for learning before signing up? It's learn.trademachine.com. Learn.trademachine.com. And if you forget or that's confusing, you can email support and they'll give it to you. And I that kind of sounded bitchy. I didn't mean that bitchy. Like, I just mean because it's a live webinar and maybe it's not easy to remember that. Like, they'll give you a direct link. So your QA equals email strategy. Generally, yes. But now that we said that, just be aware of what you're looking at when you look at it. Somebody's going to put a QA before their personal strategy and say it's a CML strategy. CML strategies are on ProScan or the Today tab. That's it. Like, they're not going to be floating around anywhere else. I'm not saying people are bad, but sometimes people do bad things. Okay. All right. Also for butterfly, yeah, that would be custom strategy. So if you want to do like a butterfly, broken butterfly, that would be custom.
Yeah, here I'll just
put in. Don't do Apple. We're having trouble with that one. For whatever reason.
So you go to custom strategy, create a new one. I'm just going to use a 30-day butterfly. It doesn't matter. You would be short the guts, right? So short 2, then long the wings. This would be a 30, 50, 70 fly. And now you got it. You don't have to do it on NVIDIA. It's any ticker you want.
Yeah, and you can do up to 4 LEX. So
yeah,
over all the fancy schmancy things, sponsor, you can do custom strategies. I saw that smart. Why not offer a lifetime subscription? Because inflation and prices change.
It's actually not why. And if you guys ever really want to know, you'll have to ask me. But it's just the reality of, I don't want to give the real answer. So.
The reality of being American.
Look, I'm American.
Able to demand a refund.
I was born here, and because of that, I get anything I want. I can have a fabulous $300 meal, and if I said after finishing the meal that I did not like the parsley on the side and it made me sick, I would get a refund because we're Americans. It's because of that we have such great commerce, because people know they can get a refund. If you know you can get a refund, you're willing to take a risk and buy something. If I give you a lifetime price, put it in, it then gets dispersed, salaries are paid, right? Okay, and then you cancel and you want a refund. Honestly, if you created enough of a shitstorm, we're gonna have to give you a refund. Right? No, Visa, MasterCard, PayPal, Stripe, they'll never work with us again. It doesn't matter if I had you sign in blood that you couldn't get a refund.
It's not just that. We can't guarantee that we're going to be around for your lifetime. Okay. Can I make backtests for both condor and butterfly in the same time? Probably not, because you can only do 4 legs. So
wait, at the same time?
Yeah.
I don't really understand what that. I've never seen a condor butterfly, so I don't know what that is.
Yeah, that's why I was saying it's only 4 legs, and if a butterfly is 3 legs, then probably not. But I mean, you could backtest them in separate tabs. I don't know. Maybe give us a little more color as to what you're trying to backtest, and we might be able to give you a hack. But generally speaking, probably not. Wait, I thought the whole idea behind the Today tab was idea and trade generation. No, I mean it is.
Yeah, that's absolutely.
But yeah, I mean it is. We're just saying, don't blindly follow things just because the technical triggered. Just because it's 14 days before the earnings, and there's no technical triggers for that, it's just 14 days before the earnings. Some of them have 50-day stock price over the 50-day moving average. Actually, I think all of the Today tab ones do, but like, just because that triggers doesn't mean it's a good time to take it. Like, just be aware of market conditions. Like, that's all we were saying. Yeah, I mean, Today tab, pro scan, that's idea and trade generation. Like,
yeah,
pro scan, you add alerts. Today tab are things that are triggered today. Like, it's true. That's true. It's just that we're not tailoring those trades based on our subjective vision of what the market is right now.
Yeah, it does not. Today tab does 95% of the work for you. It's there, you do it, you click on it, you're like, is there anything different? Let me just add one thing, still work, good, I'm good. Yeah. It doesn't mean you should, most of the time it's fine, but sometimes you might want to consider it's a different environment, but it does 95% for you. It's a huge time segment.
Exactly. Huge. Someone said in chat earlier something along the lines of like, sometimes no trade is the best trade in these kind of market conditions. Like, that's what we're saying. You have a subjective experience of what you believe the market's doing right now. We're not going to tell you what to think. We're just telling you these conditions triggered. So yes, those Today tab strategies were tests for statistical significance, and that's why they're there. But
look how many times there was a no trade, right? This traded, if you didn't do the new settings, 55 times. If you do the new settings, 18 times. That means 37 times it was a no trade. 37 times this would have traded and this didn't. So no trade that's what we're trying, far fewer trades, right? That's what we're looking for.
Thanks for explaining NA. You're welcome. That was an important comment by Ophir. Thanks.
Not a number.
I don't know what comment that was, but that was awesome. Good job, Ophir. You get a gold star. Will a recording of this webinar be available, please? Yes, we will email it to you probably tomorrow. We usually try to get it out the next day. Maybe tonight if Ophir is sufficient. I'm not there to distract. No. Okay, probably tomorrow. Okay, I am now confused about what TradeMachine can be used for in terms of actionable trades versus pure backtesting only with the usage of alerts for defined criteria across defined tickers. Why do you not consider usage of TradeMachine as a source of trade alerts that folks can consider to implement a trade? Yeah. Those are your trades that you're putting alerts for. That's fine. What we're saying is we're not going to tell you what to trade. There are services out there, we're not one of them, that say, hey, I'm doing this trade today with this option, and their subscribers follow them into that options trade. So we don't do that. But if you set alerts, you get an alert when it's an actionable trade. That's your trade. That's your strategy. Like, that's what we do. We're just not telling you what to trade. I'm sorry that I confused people on that one. Yeah, like we just don't, we will never tell you what to trade. We'll give you ideas with ProScan and Today tab, and you can set alerts for your own strategies or strategies that you find in community, but we are not going to tell you what to trade when to trade it.
CML says, well, here's a machine to get an idea. Others say, do this.
Yeah, they don't. like give you any track record with that or whatever. Every time you do a back test, that's a track record of that strategy. So
But your alerts are your trade. I mean, those are trade alerts.
yeah, exactly. Yeah. So, and those are real time too. Like that's intraday scans. Like that's true. And then there's a second part of this question. Can you consider to implement trade based on factors such as bid-ask spread, liquidity? Yeah, exactly. Yeah, you would want to consider the bid-ask spread, liquidity, and all those other things. Those alerts are action, like quote unquote actionable trades, as long as the conditions hold through the end of day for TradeMachine. According to TradeMachine, the conditions have to be actionable at 15 minutes before the close prices. But you can do whatever you want. Like all I was saying was that we're not going to tell you what to trade. Let's see. It's been the best 2 months options trading for me. Thanks. Oh, congratulations. I love to hear that.
No. I mean, people who are really, they've paid the tuition for beginner and they've paid the tuition in time for advanced. Like this is our time. It's not. I wish I could say I made as much money option trading that I have lost in long-term stocks. I can't say that, but like at least it's a reprieve. It's like fuck. This is a good time. It's a good time.
If volume is 3 to 10 times or higher than open interest, does it provide a directional bias? Several educators teach this. Oh,
yeah, boy. I know. So there's a belief that activity, so we'll call it unusual volume, that then leads to a trade idea. For the most part, that's completely garbage. It's just not true, and it's something that we like to hold on to things that explain things, and then if we hold on to the thing that explains a thing, then we can always do an action when we see that. It virtually doesn't work. Of course, there are the obvious times when there's like a biotech that trades one option a day. Someone trades 10,000 calls 5 minutes before the close, and the next day they get an FDA approval. Okay. Other than that cognitive dissonance, right? In general, no. A lot of services do that, and I'm sorry, they're just wrong. And I know because I've back tested it. Millions and millions of them. Also, I was on the floor. When you're on the floor and you're making markets, I just want to be very clear. We are not trying to help children with their baby ponies. We're not trying to help puppies and kittens find homes. When you're on the floor, you are there to make money. And that is all you are there to do. If you are going to be an asshole to someone, it doesn't matter. You're there to make money. It is the most, and it's gross, but it's the most capitalistic version of the world, being on the market, being a market maker. That's what you're there to do. What you do with your money is something else. You're there to profit. And if it means taking money from the guy next to you, fuck it. That's what you're doing. You're there to profit. One person in my entire life used order flow, and they used an order flow for a completely different reason than is used otherwise. They used it to adjust their skew so that they could raise the vol, which would mean that they are sellers, buyers, sorry, or would lower their vol, right? Which would mean that they're sellers because they're market makers. They do the opposite of what retail does, right? So it wasn't even to like get long something that someone else is getting long. It was to adjust their skew, right, their curve, so they can make a little more edge. So even the one person who used order flow, nobody does this. It doesn't make money, and you get infected with these times that it works, and you therefore ascribe the trade working to because of the order flow. No, it's incidental. It's incidental. Real traders just don't do it. I'm sorry, they don't. That's my experience and what I backtested. Does that mean you shouldn't? I don't know. I'm not here to judge you, but no, order flow doesn't work. Again, other than the dumb ones you see in the Wall Street Journal that they probably interviewed me for, right? Where it's like, it was just so obviously egregious. Yes, okay, if you see that and you're lucky enough, let it rip, but it's just not, it's not something that I've seen as consistently profitable. Sorry, I don't know. I think there are a lot of people that do this that don't really know what they're doing. Just say that.
Ophir, I understand the current market is driven by hedge funds using AI computer-driven exit and entry. Is it possible to follow them?
Well, it's not necessarily true. I don't see evidence that AI models are proliferating option trading in a way that would be meaningful to us other than adding liquidity. I don't see that yet, really. I know algos are doing natural language processing on earnings and stuff, but yes, that's for sure. And that just happens. That's one, as a retail investor, just that happens to us. You're just like, okay, that's happening to me. Let it happen. Let's move on. Oftentimes it's just noise.
Thanks again, Ophir, for the explanation of option liquidity. He gets really fired up about that.
It really hurts me when people hurt you. I don't know why. I wish I didn't give a shit, but I do. So.
Not a question, but a comment. Get that I need to develop skills to make my own decisions, but I'm building skills on backtesting. And I'm building skills on backtesting, but I'm also using the strategies making the cut as good on the Today tab as a guide to
Good.
the kind of strategies I want to develop. Yeah, absolutely.
Good.
Like it's a good fundamental base. I'm just all we're saying is like don't blindly follow somebody else.
I use the Today tab.
Even us, like yeah.
I use the Today tab. I told you it does 95% of the work for me. I see a Today tab alert and I click on it. And I just make sure everything's kosher. Most of the time, I'm like, yeah, that's fine. It's good. But I just make sure. But yes, I think the Today tab is a really good place to start. Like a really good place to start.
Yeah. Crypto is very volatile. CML makes the right reason to review this, just a suggestion. Yeah, it is. It's I mean, that's why I wanted to make a backtester, because it's so volatile. That could make, and we would have like intraday pricing on that because it's 24 hours. Obviously, it wouldn't be like TradeMachine Pro with options, and that's kind of one of the reasons I wanted to do it. I was like, hey, maybe trading that could be
4 minutes.
Systematic. No, we have 10 questions. We're going to answer them. This was a great session in understanding CML's insight. Thanks. You're welcome.
9.
Would it be possible to make TradeMachine community to be accessible to CML Pro members as well? No. I mean, it's different, and I mean, CML Pro is. You can sign up for stock.
It's not.
You can sign up for stock TradeMachine for $20 a month and get access to TradeMachine community if you want to. It's $20. Like,
guys, just like if you're a CML
it's a different area of focus, and we're just not. We can't. We give away so much stuff for free. We really do. We do so much for free. We just can't do it. Like, I hate for that to be the answer, but I mean, we're a company. We have to run. I wish we could, but
we're a commercial.
We have employees,
we're a commercial enterprise. We're allowed to say it. It's okay. That's what we are.
Can you show the strategy in the system on screen quickly, please? Yes. I don't know which.
Yeah. I would. I just don't know which one. Yeah, sorry.
Yeah. I think a webinar on creating a focus list of stocks to trade options on and 3 or 4 option strategies to have consistent performance results over long time intervals.
Well, that's what the Today
tab is.
That's what it is. That's what the Today tab is.
Not the focus list of stocks. Honestly, like just do largest 500.
I do. You can trade megas. Everything I did was on megas, things over $100 billion. You can use CML Viz, the scanner, for that for free. You can just market cap above 100 billion, copy, paste, Excel, put it into a portfolio. Easy, free.
Yeah, I do largest.
Now is the time to trade. Now is the time that I am trading megas, adjusting for where VIX is, and it's better. Doesn't mean it has to be better. It's just better.
I've had very good success this year with VW call put flies and call put verticals.
Good.
Awesome. Ophir, that was great about the butterfly. Awesome. Okay, thank you. Enjoy the weekend. Please send your prayers to the brave people of Ukraine. Peace, freedom, and God bless. Yes, prayers for Ukraine.
Absolutely. Prayers to Ukraine. Absolutely.
F-bombs and rants are acceptable here. I like you, KM. Is there a dark pool, and does it affect retail traders?
There's a dark pool, but if anything, it adds liquidity. So you definitely use limit orders. So you'll probably notice this. Those of you guys who do this, like you'll notice in markets like 130 at 140, no 130 at 145, and you put a bid in for 140, and you'll get filled at 139. That's the dark pool. So just always assume there's more liquidity than showing. It certainly can't be less liquidity than it's showing. So why not assume there's more? Don't count on it, but I mean, there's more. Yeah. I mean, also there was dark pools. The Barry and God, who traded with Barry? Barry Diller he's getting investigated for this trade with Take-Two and Microsoft, and that was that was off exchanges, and I don't think Barry did anything wrong. But so yeah, there's definitely dark pools. There's more liquidity than you think there is.
No open questions. Good job, Will. At 5:59 with 1 minute to spare.
Excellent. All right, guys, I appreciate you taking the time on a Saturday. For those that did, I appreciate you taking the time to ask questions or just to hang around. It's just my privilege that you care to hear me speak, and thank you for giving meaning to my life in this way. And I hope what I shared was valuable, and I hope that I hope things get better for you. And other than that, I'm gonna go have lunch/dinner and try to enjoy the rest of my weekend. I hope everyone is well, and hope your loved ones are well too. So, bye, guys.